my latest, to brag a little bit, latest achievement is that was creating this national fire. Leave Korea and move the entire operation to Singapore. The family office I worked with, honestly, 8
beneficial with some events around the world. So we're looking at doing some stuff in, well, we're going to be helping with Singapore. We have also Argentina coming up. We'll be doing some events together. So yeah, for those who don't know, BitAngels is the longest running investor pitch network in Web3. Michael Turpin started it in 2013. Vitalik pitched Ethereum on it in 2014. Tether was spun out of BitAngels partially with Brock, etc. So long-running pitch conference, and we basically bring together investors and founders, and we try to make matches. So today we're going to have, I don't know how many projects, I think 7 projects that we'll be pitching and looking for investment. So we'll appreciate if you guys can give me your attention and get your checkbooks out. Yeah, let's get the projects going. Richard, where are you at?
I'm right here.
All right, who do we have first?
You want to get the judges first?
Oh yeah, let's get the judges up. Do you have
I do.
Here, we'll actually let the judges introduce themselves. Brad, you want to start?
Sure.
Hi everyone, I'm Brad. I guess I'm going to be a judge here. I've been like you all been in crypto a long time. Forward technologist and then invalid developer, worked in banking, ran global dropped to Deutsche for a while. Got to Bitcoin in 2010, started mining, did consultancy up until 2015, and then opened a crypto hedge fund with Morgan Stanley in 2016. I closed the fund last year, sort of retired, just doing investing right now. Maybe looking for my next venture. Happy to be invited here to the BitAngels pitch event, and looking forward to see which companies are innovating on and seeing if I can participate. So thank you.
All right, and we have Sergey from Game Ventures. Where are you at? Woo! There we go. Go ahead and introduce yourself, brother.
Hello everyone, my name is Sergey. I'm managing partner at Game Ventures. It's pronounced Game, not Gay, not Gate, not Gavin. It's Game, the most obvious name for a venture fund, as opposed to losses. Yeah, that's what my economics professor said. We started as a syndicate a couple of years ago. Now we're a venture fund investing in promising projects across the board, hosting pitch competitions, investors Flores. Looking forward to see which projects are pitching today, and we also have a couple of projects in portfolio that overlap with DNA House. So great to be here and collaborate on the projects. Good luck everyone tonight.
All right, and next we have Chris from Draper University, and really involved in like all things Draper. So here you go, Chris.
Hey everyone, so I'm Chris, joining you. I have ecosystem growth and about venture ecosystem at Draper University. It's a founder residency and pre-seed venture fund founded by Tim Draper, who was in Silicon Valley, famous billionaire venture capitalist, and yeah, excited to be here.
We have Taco. Here you go, Taco.
Thank you. My name is Player One Taco. Thanks for coming to Taco. I am the CDO of Manifest AI, Manifest Network. We run venture capital, sort of like a Berkshire Hathaway model. Index fund token via token swaps. We sort of invest in anything and everything via token swap, giving you the compute that we need to be able to build what you're building. And so super always excited to see what BitAngels brings to the table. And awesome to see that Game Ventures has some other players pitching today as well. DNA House is an amazing place. DNA Fund is a great family. So welcome to everyone.
And next we have our very own Joe Ross, DNA.
Hey everybody, glad to be here. Joe Ross, I'm a venture partner with DNA Fund. I've been in the crypto space for almost as long as I can remember at this point. I've seen the space grow up and mature in such a crazy way. It's real honor to be here today. My passion right now is kind of the fusion of crypto and AI. I think that AI is changing the world in incredible ways. I'm really happy to be here. Happy to offer my services as a judge for the
And our second to last judge here, Young Kim.
Thanks. My name is Young Kim, and my day job is a venture partner in the Korean Government Accelerator, CCI. And one of the latest projects we did was, I don't know if you guys are familiar with a small company called Kakao. They have a division that does only blockchain called Kaya. And basically, I helped them relocate from the tech-savvy Korea to tech-like Singapore more recently. So I'm very glad to be invited to judge some of the companies here today. Thank you.
All right, and our final judge, the Bid Angels lawyer, Josh Lawler.
Thank you, Rob. Hi, I'm Josh Lawler. I'm a partner at the law firm Super Lawler. We are a very tech-oriented, prime boutique law firm. Been representing clients in distributed ledger technology since 2017, probably 120 to 150 at this point. Also doing a lot of intense artificial intelligence, and I've got to be getting close to 30 or 40 judges at the Angels events. So there's one more. It'll be a lot of fun.
Actually, is Paxo up here? They were running late. Oh, they are here, okay. So our first pitch will be by Paxo. Here you go. The floor is yours. You've got 5 minutes. For everyone, all the pitchers, you get 5 minutes. If you are under the 5 minutes, then we'll have time for questions from the judges. And the judges are all right here. And they'll be asking some hard-hitting questions. Here you go.
Good morning, everybody. Good morning, everyone. Thank you very much for taking the time to come and take a listen. My name is Toby Gilbert. I'm a co-founder of HackSwap. HackSwap is a cross-chain Uniswap that supports, amongst other pairs, native BTC. The main difference of what we do is we trade at up to a 95% discount to our three main competitors that handle native BTC and swaps. That's MyProtocol, Chainflip, and TorChain, up to a 45% discount to single chain dexes such as Uniswap, and we are at a comparable price to a dumb retail customer on the centralized exchanges. The market today, the biggest problems we have is that centralized exchanges control up to 95% of the market, and the main reason as to why that happens is they are cheaper. Now we are at a comparable price. Right, so we are sitting right at the intersection of single chain dexes, cross chain dexes, and sexes. We're handling fast, cost-efficient swaps, trustless, with built-in security, the ability for third parties to provide liquidity and earn on it, permissionless listings, and we handle a number of pairs today, as you can see, native BTC, USDT on a number of different networks, BNB, Litecoin, Bitcoin, Tron, Solana being added shortly, Base, and Ton as well. So, what are we aiming to do? The current cross-chain dexes that are handling native BTC is a $200 million a day market. We're up to 95% cheaper. We're going dead after them. Single chain dexes, $6.5 billion a day, up to 45% cheaper than them. the North Star, $500 billion a day on centralized exchanges, and we do not have any overhead to do with AML compliance, KYC. We're currently live. We did equity raise $2.7 million to go and build it. We're now live in MVP at this moment in time, and we have our first merchants being added this week, and you're going to see significant levels of traffic. We're leveraging CoinWeb's framework. So what we're doing, how we're cheaper, is effectively we're replacing validator sets with the cross-chain reactive smart contract framework. So now we offer collateralized smart contracts, and we are not locking up huge amounts of capital for long periods of time. By way of example, TorChain, up to $400 million locked for minimum terms of 3 months, over 120 validators. We mitigate the requirement for that, and that translates into the cost saving. And that's all being done by CoinWeb's underlying cross-chain reactive smart contract framework, for which we're built on top. Have a little gander. I've only got 1 minute left. Once again, going through reactive smart contract frameworks, how they work, and how we deliver consensusless interoperability. This is giving a little snapshot of how we bring liquidity in. We're bringing in through professional market makers, matching pairs, and in the next 6 weeks, we'll be opening up for retail market makers to be able to come, use the bots on the side, post collateral behind the trades, and earn on the collateral that is being posted. This is how we compare to the cross-chain dexes that currently handle native BTC only. We're connected to 11 chains, TorChain's on 9, Maya on 3 and 5. And very importantly, we're fully composable, so you can build on top of us. Businesses, merchants, gateways, Web3 projects can integrate the platform into their dApps, onto their sites, and they can do seamless swaps without the overhead of asking any of their customers for AML and so on and so forth. We're going after the B2B2C market. The amount we raised and the cost of customer acquisition, we did not want a big dump on the market that comes with the pressure when you go and raise 20, 50, 80 million. We've come in lean. So we're acquiring our customer base through a B2B2C model. Lots of Web3 gaming, merchants, and gateways. We have a pipeline of 8 that's currently good for $4 to $6 million a day that we're integrating as I stand here today. Next hop, we're making it easy for the likes of 1inch, Kyber Swap, Trust Wallet to integrate us. They work on a least cost routing model. Whoever's cheapest wins the traffic. Once we have $5 million a day on the platform in the next 3 to 4 months, we're already in touch with all of these players that are up here on the screen. And that's where you see the hockey stick curve on the big win on traffic.
You got 1 minute if you want to do questions. You'll have to stop soon.
Just quickly, we are going to be launching at a $25 million FDV. We are currently raising at a 14.7 million round at this moment in time. We are doing this on the basis that that's what we believe the technology is worth today versus all these 100+ million valuations you see in Web3 projects that don't have working technology. I'll take questions now. Shoot.
There should be some more microphones. Does anyone see microphones?
They're behind there. Should be coming.
Yeah. Thank you for the presentation. Very good stuff. We have some portfolio companies similar to what you're doing. You mentioned that your fees are lower than competitors, so it's race to the bottom. How do you see long-term business model for your company?
It's not a race to the bottom for us, and here's the key reason why. We have a native token, which is a utility token. It's used for governance on the platform, but from every swap that occurs, 10 basis points goes into a fee pool. the fee pool is locked in the currency of the collateral, which is CWEB. That is the underlying platform provider's token. The only way in which you can access the fee pool is to burn the native currency of PaxSwap. So as the market cap increases as a fee pool and it begins to overtake what the market cap of the project is, traders, as an arbitrage opportunity will occur where traders burn the swap token to access the fee pool, making it deflationary. We are not trying to earn more than 10 basis points on every transaction to reward the validators, and we don't have the cost of collateral that's being locked up on TorChain, by way of example, $400 million for a minimum term of 3 months. So our model is upside down to see how you see the current competitive landscape today. We're not trying to charge fees for the platform to win.
Thank you. All right. So you said you're raising right now at 14 mil. How much are you raising right now, and what is that going to accomplish for you?
It's a $5 million round at this moment in time. There's $1 million just shy, I've just been told, left in it. That gives us 18 months extra of runway at this moment in time, factoring in the cost of a TGE. And that should get us across the line. Bearing in mind a 25 million FDV, and our closest competitors are running at $200 million plus once that token is listed.
All right, thank you, PaxSwap. All right, let's give him a round of applause. And next we have Meow from Matterfy and American Fortress. Woo!
America, fuck yeah. No, I'm waiting for the screen to come up. Mo is working on it. So I'll just start talking. My name is Mihao. I'm the CEO, inventor of Matterfy Technology. We're a technology company. We're deep tech. We have 9 patents pending. 2, one's about to be granted. The other one's also about to be granted. We have 1 million lines of code. We've raised over $6 million. We've been building this tech for the last roughly 3.5 years. Oh, and that's my screen background, but hopefully we'll get the wallet up on here in a second. And the tech is infrastructure that makes crypto trivial for any user to use. It makes crypto trivial for any user to use. And so what I'm going to show you is the wallet real quick, and then we'll get into the business side of it. This wallet is being released to the Litecoin community next week. That's 190 million wallets. We also have a partnership with MetaMask, so that's another 33 million wallets. And we're the only private send-to-name technology in the world. You may be familiar with ENS and unstoppable domains. And if you buy one of those, everybody instantly knows your balance. When you buy one of our names, you can put it up on your Instagram, and nobody knows your balance. It is fully private, yet fully decentralized. So this is the wallet, and if you just want to scroll down, Mo, just for a second, you can see that it just looks like PayPal. Like everybody's just got a name. You know exactly who the crypto came from. You know exactly who the crypto is going to. And then on top of that, we built a decentralized DID, encrypted chat, a hardware wallet, and a custody system. And Mo, you can switch to the deck. All right, next slide, please. If we can make that full screen, or I guess maybe we can't, but there we go. All right, cool. So next slide. Disclaimer, next slide. So easy to use fintech infrastructure, making finance more secure for humans and AI. Yes. Oh, is this gonna work? No, now it's just Mo, okay. So, right now the infra is vulnerable to a ton of attacks, piles of phishing. Phishing basically works off the fact that you as a human don't understand how addressing really works. So they just keep getting you over and over and over. We solved that completely. All right, next slide. Our stuff is easy to use, secure and private, and compliant. Even though it's private, it actually has stronger KYC than any normal traditional fintech, right? So because you have cryptographic proofs of where the funds came from, even on chain. So there's no more like, well, did the money really come from Joe? It 100% came from Joe. We have a cryptographic proof for that. Next slide. So this is the wallet which I just showed you. This is called American Fortress. It's our retail wallet. We're also a B2B model. Next week, we're releasing to the public American Fortress Litecoin. And we're also doing the name presale. And the beginning of the name presale is going to be today at 6:30. We're going to be auctioning off some really cool names. And Rock, I did put Libertarian on the list for you. This is going live to Litecoin and then MetaMask shortly, and then we'll be in production within a couple of months. We just want to have a couple of months of really solid beta for this tech. Keep going. And the other thing that's being deployed to Brinks Global, so these are the armored car guys. The guys driving the armored cars, they want to be in digital custody because they don't want to just store gold in their vaults, they want to store digital assets in the vaults. And the tech provider for that is us. So we have a contract with them where we're building this out. Our wallet doesn't just do send to name, it actually also controls funds in custody with end-to-end cryptographic proofs. So all the hacks you're used to from an exchange point of view are now gone because the money goes to a name inside of the custody system. And then when there is a withdrawal, the custody system will only send it right back to that same name. There's not even a place for an attacker to stick an attacker's address, and the funds are controlled by end-to-end cryptographic proofs from the wallet to the HSM, which solves immense piles of custody issues. Everything from MTX, all the way back to Mt. Gox. Next. So we make software wallets, hardware wallets, HIH, and custody systems that I just described. Next. How much time do I have, Rock?
Minute and a half.
Minute and a half, cool. So we have brand names for these. Next slide.
That includes questions.
Branks, keep going. Let's get to the roadmap slide. So we're self-custody wallets, institutional custody names in chat. MetaMask is actually a client, although they started off as a competitor. You can go straight to the roadmap slide, and then I'll wrap it up. Roadmap is, keep going, keep going, keep going. There we go. So we raised $6 million in equity. We built everything. We have a really good team. We have a ton of IP. And then, our partnership stack right now is very, very robust. We got Litecoin, we got a MetaMask. I'm about to sign 2 more really big deals this week for major ecosystems. They're all pushing the token and the names, right? So what we found in our experiment in Switzerland, where we had Swiss Fortress, one of our clients, and that's for clients that don't like America. That project will also go live. But anybody bought a name, they immediately bought a bunch of token. They bought 5K in names, they bought 200,000 a token. So the same launch is going to be happening here. We're raising another $1 million at a 45 million valuation, and it's both tokens and equity. And the TG can be as soon as October 15th, because we just filed our MICA paperwork last week. It'll be on Kraken and one other exchange, but we may delay it a little bit just to keep getting traction because the traction and the revenue from this is so good. So far, we've gotten $2 million of revenue. Questions?
Is it just for like MetaMask and Litecoin and stuff? Can startups build on this?
Sorry, say that again?
Startups?
Yeah, anybody can build on it. So it's available as an SDK on top of our own retail wallet. So we have an American Fortress SDK and we have the American Fortress retail wallet as well. And then we also do B2B wallets. So we have UTribe as a client. We did an early wallet for Casper Network, Packet Network, right when we were getting started. So like if you're a ecosystem, then voila. And there will be a really big cross-chain partner to be doing swaps inside our wallets as well, and they're also going to be promoting it. Yes, Sergey.
Did I hear it correctly that armored vehicles would be transporting digital assets with your help?
Well, Brinks with armored vehicles will be putting our tech inside their vault. So we have a vault in a city that's like our vault. And
This is hilarious. I mean, this
Yes.
is so neat. I love it so much.
all right, no worries. Yeah, we're bringing Brinks to the digital age, right? And they also offered to buy us if everything works, so which is cool. So
Yeah, we should go to Fidelity for that because they would love it.
yeah, so one last thing I'll say is what's the exit plan? The exit plan is I think with the traction we're getting, we're going to sell this entire company in the next 12 months just because of the amount of adoption and the IP, and we're just going to get scooped up, and that's the goal. So then the price is going to be whatever the price of the token is plus the equity on the company, and the token FTV is 50 million right now. All right, any other questions?
Yes, thank you, Mihal. What plans, if any, do you all have to integrate with centralized exchanges? Like, do you have any talks with Coinbase or any of the centralized exchanges so that users can directly offboard to their
Correct.
friend's name or something?
Exactly. So we are absolutely doing that. That's part of the adoption. The first part of that is just completing the Brinks Alpha, which we're going to have out later this year. And then people will see like, oh, there's a Fortune 100 company like using this tech. Because custody is a very difficult market. Wallet's not that difficult. We already have a lot of traction in wallets. And custody, everybody's like, well, what about Fireblocks? They're huge. It's like, well, they don't want to improve their platform, right? And there's still like blatant theft and fraud happening in the custody side, and we just fix it. Like we fix it for the custodian and we fix it for the users. So hopefully that will be happening.
Thank you.
Thank you.
All right. We have a lot of questions for Matterfly there. Judges, anyone else? You can find them, I'm sure, here or after the show. Okay, next we've got Node .garden. Where are you guys at? Nodes, plural, .garden.
Something like that.
Oh, here we go. And these guys actually yesterday, so I was judging yesterday at Draper House for Gain Ventures, and these guys actually were the winner yesterday out of some pretty good projects. So now you're coming to the what is this, like the best of the best? The winners of that come here. Here you go.
How do I switch slides?
Slides. Who has the clicker? Right there. All right. Nodes.garden.
Okay. Hi everyone. I'm Ilya, founder of Nose Garden. So let's talk about airdrops, free tokens, helicopter cash. Everybody likes that, right? So just listen, please, for 3 minutes, and I'll tell you how to participate in airdrops and get free tokens easily, right? So in 2024, over 15 billion in token value were distributed via airdrops. Over 3 billion out of that went to node operators. It sounds easy, right? Let's just set up nodes and farm airdrops. Well, it's not. Running a node is very hard. It's complicated. There are no proper documentations. You have to manually compile source code, set up Docker containers. Even for experienced engineers, it takes hours or even days of work. So we make it very easy. One-click deployment. We handle all the monitoring, updates. We maximize your rewards. And we also help projects to get early users, traction, and node operators. Our business model is very simple. We take fixed monthly subscription fee, starting from just $5, and we already generated 300K revenues this year. We have more than 8,000 users, and we deployed over 22,000 nodes this year. We are focused on a testnet market, supporting over 45 different protocols, networks, AIs, DPINs in early stage. And as they all move to the mainnet stage, we are the best spot to follow them. This is a market we could capture worth over 250 billion and growing fast. Long term, we are aiming for the cloud compute market with decentralized cloud compute solution. There are a few players on this market, and we are ahead of them. We support more networks and protocols than all of our competitors combined together. Plus, we provide custom automations for farming and bots, which are not available anywhere else. Right now, raising 1 million seed round to acquire hardware, cut down operational costs by 95%, expand the team, and get into new regions like Southeast Asia. Me and my co-founder Peter know each other for more than 15 years. We are both having engineering experience, and I was in crypto mining since 2017. So you can sign up at Nodes Garden and ping me on Telegram or in person, and I will send you free notes to try out the platform. Thank you.
I have a question. Hello, hello. Yes. So what is the long-term plan? Are you looking for an acquisition? Are you looking for an exit? As an investor, how would I see a return on this?
Yeah, good question. So there are two possible ways. We are already in contact with large mainnet operators. We are talking with many of them, and they all are like interested in testnets, but they are not providing testnet services because it's too messy and complicated for them. And almost all of them mentioned that they might acquire us once we grow up. And the second way would be launching a token. We already have some ideas for the next year. Yeah, briefly that's it.
So one of the things that we're seeing now with a lot of node operators is they're having to KYC to claim their airdrops. Is that an issue that you're starting to face now? Because if you're operating so many nodes elsewhere on behalf, is it a KYC for you, but then having to KYC all of your consumers as well?
So yes, that's true. Some new networks require KYC right now. You can easily pass it if you run it on our platform. Then you can pass the KYC on the network website. And we are trying to work directly with many projects. For example, T3RN network, we work directly with them, and they just whitelisted all of our operators. We send them the full list of all our wallets, and they whitelisted them on. They don't require KYC for our users.
Can you just explain how this works from a user perspective? Because, I mean, typically speaking, you're running a node that involves a hardware purchase that's complicated, or you're using Metal on AWS or someplace like that. Like, how do you kind of rapidly deploy for that many users and make it that simple?
So the question is how.
So say typical user, it's me. I'm an idiot. I execute like a moron. So how do I suddenly start mining, recognizing that there's equipment and gear that needs to happen? It's not just a question of somebody managing the node. I actually have to have access to the node. I have to make a decision as to what I want to mine. Like, how does a typical user approach this?
Yes, a typical user goes to our platform. We support 45 different networks. You can pick any network you want, like Aztec network, Zero Gravity, Jensen AI, whatever. We run many of them. And you pay for a subscription fee every month, and we run it, update it, managing. You can track all the logs of your node on the dashboard. So, yeah.
All right, thank you, Nodes.Garden. Round of applause. We have next, you can just hand that to the judge. Next, we have Boost. Boost. And these guys also pitched yesterday at Draper House and did a great job.
Thank you. Thank you. Okay. Hello. Hello, everyone. My name is Boris. It's not working the same. I don't think it's working correctly, but so Boost, we provide infrastructure for banks. There you go. Started working. So basically, we are a plug-and-play platform for we provide infrastructure for bank. Vanilla say to say this plug-and-play platform as a service for banks. What we do is we have a platform that enables the banks to manage crypto, right? Our first approach was offshore banking. Basically, these banks were being approached by clients asking if they can handle the crypto for them, and they couldn't because they didn't have a platform and didn't know how. So we basically built that platform. We connect to, the easy way to see this, we connect to the core banking like Infosys, Data Pro, and then we actually speak the ISO protocols. We also have open banking connection. It doesn't show there, but basically we connect directly to the Infosys, to the Data Pro, to the Mambu. This is the next one is actually, we have one client. We have one client in the Caribbean. This is actually, the best ways to see this is, anyway, we have a bank in the Caribbean. In Antigua, we are close to finish a deal with a second bank in Panama. These are the Antigua bank is a small bank. The Panama bank is a medium bank. And basically, they are using us to start taking crypto and do custody of crypto to their clients. Doesn't show. So that's actually a screenshot, a modified screenshot of the platform that we're doing for the bank. Basically, it's the same. We integrate to their online banking. They will see all the normal assets, and they will also see the crypto assets. So, well, the team, they ask. We are raising our angel round. We've been only 6 months in this. We've been raising for 1 month only. We come all from banks. I'm the CEO. I've been in crypto also from very early in the move. The co-founders are all from the banking industry and the payment industry. And that's, sorry, the slide didn't work very well, but that's what we do. And yeah, we're raising the angel round, 500K, a 10 million valuation. We have, yeah, that's what we do. Thank you.
I heard you say that you're going to do a 500K raise at what valuation?
10 million.
And is there a token?
No, we plan token, but right now we're just equity.
Okay.
Mm-hmm.
Boris, thank you for presentation. Now I really get what you're doing. how much would bank earn by implementing your tech?
Well, I mean, it depends on how the banks want to implement the business, right? Some of them, they want to manage the. We have two kind of clients. One, they want to manage their own liquidity because that's the bank's business, right? They manage liquidity. Other ones, they want us to help them manage the liquidity. Actually, we have a full model to integrate liquidity protocols, right? So, what the banks are we doing so far? They pay a third party to handle the crypto.
How much revenue do they project after implementing your tech?
Well, the small bank in the Caribbean, they're trying to charge the users a fee. So we assume that they can target about 3 to 5% of the the assets they manage for the
3 to 5% of the assets.
Yeah.
Have they signed up at that? Have they confirmed the calculation?
The first bank is a very small bank, so they're very niche. So it's hard. That's what they're targeting.
Looking to hear more about the case and the outcomes of it. Thanks.
Yeah.
What stops a bank from going like with a PayPal or something like that? You know, PayPal is starting to do their own stable coin. Why would they go with something like this instead of going with a major player?
They cannot give they handle the liquidity of local clients in PayPal. You have to handle liquidity locally, right? This is for local banks. So the bank in the Caribbean, they cannot send the money to PayPal, right? Still, they are still handling the money they are of clients locally, right?
So this is primarily for smaller banks, right?
Well, I think it will work for bigger banks. The smaller banks are ways to cross the chasm. It's our niche, but actually the bank in Panama is not that small. It's a medium bank size.
Thank you.
Thank you.
And Richard, who's next?
Oh,
Lusa up next. And everyone, I understand everyone's getting served lunch now, and if you guys want to chat a little, that's fine, but if you could just keep the chatter down so that we could hear the people pitching, and then also, if you're pitching, please talk into the mic, because it's a little hard to hear with people chatting. And then same with judges, make sure you talk into the mic. Here you go.
Excellent, thanks Brock. Right.
5 minutes, quick questions.
Hi guys, well it's great to be here. Thank you for the invite. We are a game development platform and we're producing the next generation of not only gamers but creators. Before I go into our deck, which is all about the technology, I'd just like to ask maybe a member of the panel, what makes a good video game? Or for that matter, what makes a good film? Or book? Why was Star Wars so good? Engaging, connection, characters, storyline, multiple books. Yeah? Why, like Forrest Gump, humble beginnings, one of the greatest life stories we've ever seen. We all feel that connection. And that's what we're building at Lusso, is an ecosystem of connection between gamers. And then we move over and you say, okay, but there's been a lot of kind of Web3 games. There's been a lot of money raised in Web3, yeah? So, from my reckoning, 2020 started, a few bit, and then about $2 billion a year, roughly. Some of it's token, some of it's development, but all Web3. So over $8 billion. You got two standout successes, but they were short-lived. Axie Infinity, you know, it was breed, battle, trade. Breed, battle, trade. You can have some fun, but it's kind of, you know, it doesn't get you going. And Splinterlands, digital trading card game. It's fun, but it's quite niche. Again, short-lived, but successful. So what they taught us is that Web3 is out there, it can be successful. But what you need for a successful game and platform is longevity, engage. So let me get into this. Oh. I think, could you stand away from the thing because it's not working? Oh. There you go. So the main AAA studios have had a hard time recently. 70%, you know, down in funding, etc. UGC is where it's at. Roblox are going to pay out probably $1 billion this year in UGC funding. That is only 20 to 25% of the UGC revenues. They take 70 to 75% of that. And what we're doing at LUSA, apart from being part of the AI crowd, and that's it, yeah, is that we're bringing that fair monetization into game development, so people can actually have true asset ownership. So we're not a Web3 game, we're a Web2 game development platform, so we're going to appeal to hundreds of millions of people. Roblox have got 380 million monthly active users. So that's our target, that's our ambition. And when it comes to AI, we're also not going to try and out-research the likes of Google, Meta, Elon Musk, etc. We're going to bring in and integrate seamlessly into our platform, and we've already done most of it, all the best-in-class AI tools. And then on top of that, to build our moat, yeah, apart from just being ahead of the game when it comes to game creation, we're going to be building our own AI stack, specifically for game development. And that game development is AI non-playing characters, building worlds with simple prompts to 3D animations. You know, we can already reduce the time and cost by 60 to 70%. That's only going to get better. And then we combine that with our own, well, with Web3 technology. And part of the platform that we've got, and we've got so much going on, it's very difficult to get into 5 minutes. We've got real asset ownership, we've got transparency, we've got interoperability of assets, not just in our, between games in our ecosystem, but across ecosystems. So think TikTok, how TikTok became big. They allowed you to share anything on any platform. We're going to do the same with gaming. But it's true asset ownership, game asset finance, you can make money passively, everything that Web3 was built for. So we're designing a game creation platform built on fun for players, and I should have said this at the start, but our founders are professional gamers. So that founder experience you see in other industries, really important in what we're doing today. So what you're going to get from us, apart from the fact that we've got an amazing team, you know Dr. Adele already, but we've also got Chris Cross, is our game director. Medal of Honor is his #1 credit, but he did like 4 Medal of Honors. We've got Enon Zur doing our music production. He's an Emmy Award winner for like Dragon Age, Starfield, etc. And Several Gay, Yatsu, Nicholas Boyd, Ubisoft. We've got Mike Wallace from Epic Games. These guys, when you get to know us, not just over 5-minute pitch, they not only are advising, but most of them are invested. And not token amounts, serious amounts. So whereabouts are we? We've done pre-seed. We've raised $1.6 million. We're after $5 million now in seed investment. Thank you.
So one question. Okay. Is that now on? Yeah, okay, good. So, all right. There are a lot of people chasing this ball. I know a bunch of them. And I'm convinced that really this is a marketing and rollout question. Like, what's your marketing and rollout plan, and who do you have that specializes on marketing and rollout? Because that's what this is all about.
That's exactly the point I would have got to if I had a bit of time. So it's the community build, the go-to-market community build. And I'm really pleased. I mean, Pierre, I don't know if you know him, he's the head of PSG Labs. He's here with us today. We will be signing a deal with them over the next few months as one of their top 3 partners and the only one in gaming. So PSG Labs is the innovation arm of Paris Saint-Germain Football Club, Champions League winners for those that are European here. And they have a fan base of 550 million people. And we're going to help with their fan engagement, amongst other things. We've got an esports tournament all lined up to go live, probably in December, which is going to be used for, we've got a no-code development platform if anyone wants to see it. So you can basically prompt to no code. So we're going to have a creator-thon amongst all of their fans who can build the best game. And then that's going to end up in probably Doha, the Parc des Princes in Doha, as a finals in March, I would have thought, on these sort of timelines. And that dovetails our release as well. So we've got access to 500 million fans. We have other partnerships, but that is by far the one that we're going for.
Yeah, Par's good. Okay.
Is that okay?
Rock's going to pull you off, but we should talk later. Rock, where you go, bud?
Thank you very much.
All right, Lusa, give him a round of applause. And Richard, I just saw him running somewhere. Who's next? Oh, yeah. What Wonderland? Here you go.
Is there a control?
Somebody's gonna
Aim-
get it
actually
right.
aim at that direction.
Somebody's
Aim
gonna
at
get it
that
right with
direction.
AI
Alright.
games.
So,
It's very, very hard to get scale.
yeah, hi. Welcome to Korea. Welcome to Seoul. Yeah, waiting to see the chart already. I'm introducing myself. I'm a Korean university professor. I got a lot of R&D funding, but I don't have a business funding. So that's the reason I came here. All right. So I raised about 7.2 million Korean R&D funding and built what's called World Land. The World Land is a place where global people come and provide digital AI services to each other and they get paid in stable coin. And then we have, enabling technology. Since we are building mainnet, what's the key part in mainnet? Two things: virtual machine, consensus algorithm. We built a consensus algorithm called error correction code, verifiable compute consensus. Okay? So as long as you do verifiable compute, then it comes to the conclusion of a consensus. There is only one such consensus algorithm like that. What is that? POW. Nakamoto invented a very clever algorithm. POS is you have to rely on Byzantine fault tolerance algorithm, which is invented in the 80s. So we went back to 80s. But since we made a post-quantum cryptographic consensus mechanism called ECC VCC, again, error correction code, verifiable compute algorithm. Now we can use this type of thing. We can do the coin flip. If it turns top, it should be verifiable, right? Everyone should be able to verify it that you turn the top. Then you run the mining algorithm. If you turn the bottom, if you flip the bottom, then you should take the rest. But since we are doing POW knows doing competition for mining, so they will bring in GPU. But we have an anti-ASIC algorithm because the error correction code, you can increase the length of the error correction code indefinitely. So it is but that's what I have explained. That the core technology. Hold on. Right. So we have an AI. Who should own your own AI? That's the question. You or big tech? Now, pretty soon we'll be enjoying humanoid robots delivered to our home. Inside the humanoid robot, there is a brain. That brain should be yours or big tech. That's the question, okay? If it belongs to the big tech, the humanoid robot knows everything about me, but I don't have a full control, then what's going to happen? That humanoid robot can even kill me, take away everything that I have, all the wealth that I have built throughout my lifetime. So it is a critical issue that AI should run on blockchain-based cloud. That's the message, okay? So there are bottom line, and then this is where World Land comes, okay? And then here is my vision, basically. Digital World Land is a digital land. Global people come like we are doing today, but in digitally. Oh, 1 minute. Oh, really? I see. All right. So basically, that's the summary, executive summary. Basically, we have built that technology into a mainnet platform, and we have some contract fees and transfer. So basically, this is about. So you are doing decentralized project. Can you make your project sustainable? Yes, you can. That's what this is talking about. So we are doing mainnet, Web3 cloud, personal AI. We are bringing the personal AI era, right? So basically, that's what we are saying. We have built the technology. without using zero knowledge proofs, without using fully homomorphic algorithms, we can do amazing things like having users own their AI models. Okay? So that's the. Oh yeah. All right. So we have a revenue models, market opportunity is very big, and then we have a roadmap. I have raised already 7.2 million government funding. Now I'm looking for investment proposal of $2 million US. Then I can build it in 6 months, and then we can have it listed in the global exchange. Questions, please.
Yeah, thank you. On one of your slides, you said that neither proof of work nor proof of stake can support user-owned AI agent and stablecoin payments. Why is that?
Yeah, basically we have in our network, we have a GPUs because of ECC, BCC, the consensus algorithm. Then in order to run AI, you need just two things: data, GPU. Data is brought by people, okay? Conglomerates and enterprises. Lawyers, taxpayer. Tax, accountants, things like they have knowledge, and then they can provide this knowledge. Another assistant is engineers. So a lot of knowledge, they can provide their knowledge to other people, and then get paid in stablecoin.
Thank you.
Yeah. Thank you, Professor, for your vision. Thanks.
Is there any other question?
Okay.
All right.
Thank you. All right. We have Wellspring. There you go. Again, if everybody could try to keep the chatter down a couple notches, please. It's a little hard to hear the pitches. There you go. Yeah, this is second to last pitch, so if we could have everyone's attention, would love you for it. Thank you. You got 5 minutes. If you can stop earlier than 5, though, then you have so much time. I see. Okay. All right. Thank you. So.
How's it going, everybody? Hey, guys. So I would like to introduce you to Wellspring, where we make your money work hard for you. So the story behind Wellspring is that we have a number of hardworking Americans whose savings are deteriorating because traditional banks pay less than 1%, oftentimes fraction of a percent, but the inflation is over 3%. So every year you're losing your buying power. What we've designed is the ability to give anybody in the world a US-based bank account, and that bank account generates about 12% yield. Under the hood, it's powered by stablecoins and DeFi and hyperliquid ecosystem. So now everybody who is located in over 100 countries is able to have a US-based bank account and get the high yield. So the timing is perfect because people have become comfortable with the DeFi ecosystem. A lot of institutions are going into the space, and we're live. We've just recently won Hyperliquid Hackathon. We're built on Hyperliquid. We have about 100K TVL to date. We have about 50 users. We're retail-facing platform. We are rolling out a SDK because there's a number of businesses that are interested in integrating with us. And we're also rolling out an integration with a qualified custodian in the United States, which will be a big institutional play. So kind of going off not all of the slides here, but $17 trillion is processed in direct deposit, and we see us as the future go-to bank for any American and anybody worldwide. They'll get direct deposit directly into Wellspring. They'll have the yield. They'll have the money working for them, and they'll have the Visa card that they can access their assets on the platform. It's kind of a snapshot of everything that we offer, but our revenue structure is we charge 1% on any income and deposits, and 20% of the yield that we generate. So kind of a pretty traditional asset manager hedge fund structure. Go to market is pretty straightforward. We're with the retail-facing platform. We've previously scaled iTrust Capital, the largest crypto array provider, so we're very well plugged into the KOLs and the influencers in the space. We have over 60 partnerships that we're connected to. On the institutional sides, we have strategic conversations with some of the hedge funds and asset managers that are not DeFi. There's the SDK, as I mentioned, kind of a comparison of what's out there versus what we offer. There's the team. The founders are from iTrust Capital, they're early founders. We have one of the founders of Acorns. We have Michael Holstein sold his company to Citi, and a team of engineers. So we have a very solid, cracked background, and between TradFi and DeFi. We're raising $2 million that will give us about 18 months runway and will get us to 1 billion ARR. Thank you.
Thank you very much. I apologize if you mentioned this. For like a 12% yield, where does the yield come from and what is the risk?
Over collateralized lending markets. It's got 1 2 1 2.
Turn off.
The yield is generated from hyper-liquid ecosystem over collateralized lending markets. So it's not FDIC insured because it's in stable coins, but it's as safe as it gets in the DeFi space. I don't think it works.
You're earning stablecoin?
Yeah.
So you're not earning a separate token?
You are earning a separate stable coin token, HY USD.
The hyperliquid,
Yeah.
not the one you're issuing.
Yeah, we're not issuing anything. We're using USDT0 for that.
So where is kind of the moat on this? I mean, I'm listening to what you're doing, but it sounds like something that, but for putting together the partnerships which people can do, anybody can sort of establish this same type of dynamic using Hyperliquid, get 12%. It's open. Like, why would a big bank not do this for themselves, avoid paying you the fee?
Well, so the question is, why wouldn't a bank do it themselves? So the mode is that, I mean, I think today with AI and all of the technology advances, anybody could do anything. But we're a perfect integration of regulated, and I think as an attorney you appreciate the clean regulatory structure. And so TradFi and DeFi, the connectivity. There's a bunch of banks who give you 4% yield on your money market, and then there's a bunch of yield platforms that give you 15, 16%. But there isn't a bridge between them. What we've done is we completely did the account abstraction for you to receive USD. The money goes into your personal bank account, or your Wellspring bank account that we give you, and then under the hood, it's swept into stable coins, account abstractions get into hyper-liquid markets. So it's the banks don't do it because they don't know how.
So are you running this as a credit union or trust facility like you did with iTrust Capital, or is it you're running a full banking service as like a credit union?
So this is a self-custodial structure. So we're a technology provider only. For the institutional clients, we do have a partnership with a trust company, North Carolina State Chartered Trust Company, that we will use as a custodian if the client chooses to use that structure. So self-custodial or a trust partnership.
So I've seen with some of the other pieces that are doing stuff like this, where you're doing a debit card as well. Is this being tied in? So an on-ramp, off-ramp, is I'm getting charged 1% every time I swipe my card, or when I'm on-ramping into the bank account?
So it's when you on-ramp is 1%, so it goes from fiat, from USD to USDT0. That's 1%. That's how we're covering our on-ramping costs. When you swipe with a Visa card, there is some cost that we have for the partnership with that provider. But it's as low as 25 bits for the money coming out.
And you said you're raising $2 million at what valuation?
10 to 12, but we'll let
Is there going to be a token?
We do track points today. We don't have a TG set yet.
What's your TVL?
About 50K.
Okay.
All right, guys. Sorry, guys. We have a panel coming up, so we really got to wrap it up. But I love that the judges have a lot of questions. I hope that means that some of the judges are going to be writing some checks here. All right, guys. The final pitch by a very handsome, and he's very young, he's not old, And his name is Rock Zacharias. Woo! All right. So I'll do a quick intro on myself. If we can keep it down for just 3 more minutes, guys. So I'm Rock Zacharias. I'm the CEO of Lunar Digital Assets. We're a venture studio. We incubated Polygon, QuickSwap, a bunch of others. I'm head of Global Leadership Council for BitAngels, so I oversee all the BitAngels, 30 active cities and 40 to 50 semi-active cities. I also serve on the board for Polygon's grant program, so that's a $1 billion grant/investment fund over a 10-year period. I'm a mentor for Tim Draper's Bitcoin Fi Accelerator. I'm co-founder of QuickSwap, and I'm finally putting my co-founder hat back on, getting down and dirty, and I'm a co-founder of LitVM, which I'm going to be pitching here today to you guys. So yeah, first time he's got me on the timer. So this is the first time I'll be actually co-founding something. You know, I live in the startup world, but I'm going to be co-founding this LitVM. What this is this is a layer 2 for Litecoin. Uses ZK rollups and rolls up to Litecoin. This is pure ZK math rollups to Litecoin, no trust. And it also rolls up to Ethereum and all Ethereum L2s through Polygon's AG layer. So this is a hybrid rollup. It's a very custom thing. We're doing this with the help. I'm not a slide guy, so we'll try to do some slides here, but you guys can kind of look at those if you like. And it's a little cut off. Wonderful. We're doing this with 2 tech teams. We have Bitcoin OS, which a lot of you guys are familiar with. I think some people here are investors. So Bitcoin OS is building the Litecoin side rollup, the UTXO rollup. They're the first to be able to achieve this. There's a lot of people in the Bitcoin space and others on the UTXO proof of work space who are doing things like BitVM, which is basically optimistic rollups to proof of work, but we're actually doing ZK rollups to proof of work, which I'm a big believer in. I think, like Vitalik said, optimistic rollups will be a big thing for probably 3 to 5 years, and then once the technology catches up, that's when ZK rollups will take over. I think we're right on the cusp of that now. ZK rollups in general have seen about 1,000 times improvement in efficiency, speed, and cost over the last couple of years, and they're growing rapidly. Still a little clunky, still a little more expensive than optimistic rollups, but we're making great progress on this, and the key is there's no trust. You don't have to have a contestation period. There's no slashing. This is pure math and trust, and that's what we're doing with LitVM here.
How do we make money, Rob?
I don't know if I'm allowed to say. It sounds like are you trying to bait me as the lawyer into some securities questions here? Okay. Yeah. So basically, why is this interesting? We have Charlie Lee and the Litecoin Foundation fully endorsing this with official quotes to media, going on podcasts with us, and actually we have David Schwartz, one of the Litecoin Foundation members, is on our team. He's overseeing community governance to make sure we behave. 51% of the tokens for this are going to the community. So if anybody was an investor or used QuickSwap, you may remember I, as co-founder, took nothing. I gave everything to the community. As a team, we gave 97% of the tokens to the community. And I think that's one of the reasons QuickSwap did so well. A lot of people made a lot of money. Wasn't me. We actually at QuickSwap generated $100 million in revenue in our first year. I've never taken $1 single from QuickSwap Foundation, from any tokens or anything like that. We actually turned down a $20 million investment from Sequoia. We kept it very community oriented. With LitVM, we're doing it. We're doing it a little. I hate slides. I'll just keep going. We're doing it a little different. We're going to be giving 51% to the community, but it'll be very community focused. And David Schwartz from Litecoin Foundation will be overseeing this governance and making sure that it's good for the Litecoin community and the LitVM community. What else is interesting? We have an institutional and DApp play going with this. So we are building strategy vaults on the chain. And these vaults interact with Cefu. Cefu is previously Binance Custody. It spun off as Cefu for regulatory reasons. And so Cefu uses these sharded vaults, and the vaults on our chain will plug into these vaults. So it's a multi-step procedure to kind of protect the users and protect their custody. Then, once it's in Cefu on Binance, DNA, through their treasury management strategy, will be managing the Litecoin and getting people a yield. They're averaging 12 to 15% on this, and then there's a small performance fee. And then we'll take a small performance fee and give it to the token holders as well. So it'll probably be about 10% to institutions and users who put their Litecoin onto the chain, all in a trustless manner with ZK rollups. I'll stop there. And anyone have any? Oh, a couple more things actually. We have David Chom on this, the godfather of cryptography, and we've got Michael Turpin, the godfather of crypto. So we have double godfathers on this one. Anyone else interesting? Yeah, we'll stop there. Questions?
Where are you at with the technology? How soon can you launch? And what's in the way of getting there?
So the ZK rollups to Litecoin is 95% done. The customization of merging that with the ZK rollups to Ethereum, 40% done. I'd say we're probably 1.5 months from testnet and probably 3 months from mainnet, but we're actually TGEing before that to raise funds and continue the build out. It's a decent amount of build, but we've made pretty good progress. Bitcoin OS has already proved the ZK rollup on the UTXO side, as you know, Joe, to Cardano and Bitcoin, and we're just doing some customizations to make it work with Litecoin. Next question.
So how much are you raising and at what valuation?
5 at 50. It's safe with token warrant.
What's the forecast range for the Litecoin price after you go mainnet?
So that's funny. We actually, a big part of our investment thesis is that there will be a Litecoin meta. This is really important. Everyone listen up. If you guys have been around, you've known Litecoin for a long time. It was one of my first coins. It's our founder Aztec. It was his first coin. Everybody has fond memories of Litecoin. And we've been seeing lately with DATs and a bunch of other stuff, a lot of these OG or Dino coins have been taking off. Stellar, XRP, Bitcoin, a lot of these are taking off. And we think Litecoin is going to be a part of this, is going to be the next meta. So there are 3 DAT companies. We have Luxfolio, which is actually our lead investor. They invested $1 million into us. So one of the DAT companies is investing in us and they're a sponsor of this event. And they are going to be committing a large amount of the 100 mil they're raising for their DAT to LitVM for yield. And then there is also MEI Pharma, now rebranded as Light Strategy. And they raised 100 mil and like a day later raised another 100 mil. So there's a lot of demand for this. You have Canary, who just came out. That's the old Valkyrie CIO. And they raised a ton for Litecoin ETF along with their Solana ETF that they're doing right now. So there's a bunch of teams and DATs and ETFs coming out on the scene. They're all going to be looking for a place to get yields, and we're their top choice right now. And they've told us that. One more question?
So what's
I'm
the
gonna take host privileges to snag one more question.
Rock, you didn't say what's the range for the Litecoin.
Price predictions. I don't like price predictions.
Yeah, no financial
I'm gonna skip that one. But we think if this does really well, and there's others now. We announced at Litecoin Summit, and right after, like Bitcoin Computer came out and announced they're gonna do something like a layer 2 for Litecoin. The drive chain guys from Bitcoin, I think that's BIP 361 or whatever. They announced they're gonna do something for Litecoin. So I think they just needed to see a big mover come in and validate that this is a place to build things, and now all these other people are saying they're building stuff. So we've got a bunch of DEXs already announcing that they're coming to Litecoin, and yeah, I think we're going to lead this Litecoin meta, and I think Litecoin's going to go up a bunch, and it'll be a bit of maybe the tail wagging the dog. If we do well, I think Litecoin will do well. All right, thank you guys.
Thanks, Rock.
Thanks,
Cheers.
Rock.
Okay, everyone. Are you gonna change the screen? Okay, everyone.
Is this on? Yes. One of the things I've learned today is that some of you all only know us as DNA House. DNA is much more than DNA House. We invest in companies, we advise companies, we are at the forefront of the Web3 revolution, and today we're going to be talking to some of our portfolio companies, letting you learn about their story, what they're building, and where they're going. Our first company we have today is Matterfy. Mihao. Mihao, are you around? We have Mihao, American Portraits. There you are. Mihao, thank you. Thank you for being here. So, we just heard in your pitch a little bit about Matterfy.
Yes.
I would like to kind of roll the clock back a little bit and tell us, how did this all start? What did you see in crypto? What problem did you see? And what prompted you to start Matterfy and start building this project?
So actually it started way before crypto. I've been a hacker since I was 15. And my first company, I built an Intel system for the Navy that ended up getting sold, and that was my first exit. And then I worked in software security as a pioneer, and I just realized how easy it is to break into everything. So I did that career from, basically I graduated from UVA, and then for like 10 years, I was just a hacker. And eventually I burned out on just hacking because everything was broken all the time, and there was no like solution. And then crypto came around, and we put all the assets on chain all of a sudden. Right, and all of a sudden I was like, oh man, now the robbery is really gonna begin. Because before, like, hackers would like disrupt some stuff, maybe they'd do some blackmail, there'd be a virus, right? But they couldn't like just reach out and grab a pile of money. And in crypto they can, and they do this to the tune of, billions a year.
Yeah, it's digital cash.
Yeah. So when that happened, I got with a few friends of mine that. So one of them was Justice Ranvier, the inventor of BIP47, and I said, look, we can make this better, and we can turn it into a platform that destroys the phishing, right? And then that's, my passion is basically making something that makes it incredibly difficult for attackers to get at, but for the users to be incredibly easy to use. So we made this decentralized PayPal that I showed you. Right?
That's kind of been one of the biggest things, in my opinion, holding crypto back. It's, as a crypto evangelist, I've had friends who I got into crypto, helped them set up their wallets and everything, and then 6 months later they say, hey, I just clicked this link, where'd my money go?
Yeah.
How do I get a charge back? Yeah. So how are you all addressing that? What concrete steps can people take with Matterfy to prevent phishing?
Well, so in our case, we're really discouraging the use of like a web connect, right? It's because we're putting all the functionality the user needs inside the wallet itself. So if like you're an ecosystem, essentially you're like a chain link or something, right? So now we're essentially making like the chain link wallet, right? We're making the MetaMask snap for those users. And then in MetaMask, you'll still be able to web connect, but you'll at least be able to verify the identity of the counterparty, right? So like, you just know it's like, look, I don't sign anything if it's just an address. I only sign things if it's a name, because then I know who the counterparty is. Because, for example, I can see their Fortress name like on their Instagram. This is our Fortress name. Unequivocally, this is us, right? So we do a lot that addresses that exact issue. So the custody system works that way. The DID works that way. So like me and you can be chatting in our encrypted chat, and then I can say, okay, well, you're about to buy a car, I need to see a copy of your ID, and you can send me a decentralized proof of your ID, just to me, right? So between me and you, we have this cryptographic KYC that's like way stronger, right? Now, you might say, all right, well, prove to me where the source of funds for this transaction are, right? So in like...
It's all on chain?
Yeah, so in TradFi world, you're just gonna like show a bank statement that you can doctor all day long, right?
It's a pain in the ass. Like,
yeah. In our world, like you can just say, no, I got this money from the user over here, and here's their KYC proof, and I can turn that into a cryptographic proof. But third-party attackers, and we sell the names, which is a pretty big market, because still, a miracle hath occurred, and no one solved this problem except me. Like I really like every day, I'm just like, why? But it's a technically hard problem to have like universal stealth addresses, right? Like that's what this is.
One question. So, once you have your name, what if you lose the keys? Have you all solved for that in any way? Like, what if you lose access to the keys that controls your name? Is that still part
Well,
of
then you have a bigger problem. You also lost your money.
Yeah. Yep.
So the way we're solving that is we're doing your typical Zengo style backup the keys to my iCloud type functionality. The beta wallet that's coming out next week is a straight up 15-word custom seed that we use that crypto users are expected to understand. That's really going out to the crypto audience. When we go into production, we'll have a lot more options. That's not the technically hard part. It's not hard to back up seeds or MPC them. It's been done by a lot of different tech companies. So we're going to be borrowing from that so people have backup. The way the names work is when you reserve a name that's going into like a regular username and password website, you'll have your list of reservations. And then when the wallet goes into production, you'll be able to take a name and attach it to a key. At that point, it's locked to that key. So if you want to transfer the name to a different key, you still got to have that key.
So kind of like ENS.
It's like ENS except private.
Got it.
Right. So the thing I want to emphasize: there is no list of addresses anymore. It doesn't exist.
That's so big because another thing holding back crypto is that if you want to use it for a payment, if you want to buy a hot dog from a hot dog vendor, you don't want him to see your balance. You don't want to be sitting there on the street having somebody see how much money is in your bank account. Privacy is
you want the vendor to see how much money they've made, right? And you also don't want, when you're paying for the hot dog, with ETH, and you don't want the hot dog vendor to know that this guy, you got
wrench attacks are a real thing.
Yeah. So, one of the reasons we're really excited about Litecoin, we're very bullish on Litecoin, and also LitVM. We'll be helping Rock. So if Rock wins the contest, I won't feel sad. Because Rock's a client and a friend, And we're all in the, I'll say the one thing I left out of my pitch is that I super appreciate DNA, super appreciate LDA, super appreciate Michael Turpin, I super appreciate IBC and Mario. I know some people are like, Mario, but we're having a great experience with Mario and IBC and just the whole family. And the entire ecosystem is really helping us grow, and then everybody's going to have affiliate links for the names, and you'll be able to just go ham.
Well, thank you. We love working with companies like you. Can you tell me a little bit? So American Fortress is a product from Matterfi, is that right?
Correct, yeah.
What's the relationship between American Fortress and Matterfi?
So very shortly it'll be an official subsidiary. Right now it's a DBA. Okay. So it's a wallet that's entirely owned by Matterfi. So if you're an equity investor, you own American Fortress just as much as you own Matterfi. You also own the token. So this is like a single infra that's powering the entire ecosystem, whether or not we white label it for somebody else, right? So there'll be other wallets. Like we have one client called Utri, right? So their wallet is called the Utri wallet. It's still powered by Fortress names. It's still compatible, right? But we were like, it was really obvious once the unofficial, now slowly becoming official deregulation in America happened, we could start to release this in America. Because it is privacy tech. So the reason you didn't see it in 22 and 23 is I was just like, well, Gensler's gonna get me. Gensler might be like, oh,
it was
privacy
dark
tech's
times.
Yeah. Right? So, but ultimately, we don't break chain analysis. We have stronger KYC. So, I'm talking to a lot of regulators and projects that are very interested in meeting the regulatory standard while still keeping it decentralized. That's what's unique. Because a lot of people think, privacy hides money. Well, privacy actually, it does that, but it also lets you have really great compliance tech. Because even the government doesn't want the hot dog guy to be exposed, right? But they want the hot guy to be able to report his taxes and say, look, I got money from these 20 customers, right? Instead of I don't remember where this money came from. It was like a crypto transaction,
Exactly right. So wrapping up, one final thing. How can people get involved? Where can they find you on social media? How can people get involved today?
Yeah, so AmericanFortress.io is the website. There you'll find the token, the white paper, the link to the X account, which is AmericanFortress_IO. We have a Telegram channel. We have a TGE coming up that's kind of perpetually getting delayed because we keep getting more and more traction. But we're trying to do it in October. And then we're raising the last $1 million of equity in our round. So, if you're an investor, you can come talk to us about that as well. And you guys, DNA brought some funding to us as well already, which is really terrific. So always grateful.
Perfect. Thank you, Michal. We appreciate it.
Thank you, Joe. Yeah, really appreciate it. Yeah.
And up next, we have Steve, the CMO from eStateX. Steve Lawrence. Welcome to the stage, Steve. Great to meet you. How you doing? Hi. Great to meet you. Hey, guys.
Want to share the mic?
Yes, let's do that.
Good.
So we're gonna walk through the past, the present, and the future. Can you all tell us
Sure.
a little bit about the past? You know, where did you come up with the idea for eStateX? What need in the market was not being met that led you to build eStateX, and what is eStateX?
So eStateX, we're basically tokenizing real estate. So the main need for eStateX is there's a lot of bullshit going on in the world at the moment. Can you hear me? Yeah? Check one, check one. So there's a lot of bullshit happening in the world, excuse my French. And there's a lot of situations where it's just diverting attention from the everyday average Joe. And with a lot of stuff that's happening up high up in the 1%, the average Joe is getting screwed over. You know, rates of inflation are going through the roof. The average 30-year-old can't get onto the property market. You know, the banking systems are getting more difficult with the interest rates. Financial literacy is at an all-time low. The gap between the rich and the poor is getting bigger and bigger. There needs to be a change, so we wanted to have a solution that leveled the playing field for everybody. So we're tokenizing real estate. With eStateX, you can, with as little as $100, you can get onto the property market. So, you know, we're making investing in real estate simple, affordable, and accessible for anyone, anywhere.
Just to add on that quickly, I think what an important note is as well is that it's not only the investment into assets what is not always available for the everyday individual, because you could also go to a REIT or a crowdfunding platform, right? I think one key difference that makes us really, really different is the all-in-one financial ecosystem that we have, where you do not only have the possibility to invest within a couple of minutes, but also have exit options within a couple of minutes, liquidity, have debt against your assets, which you can use for leveraging purposes. We have eStateX Pay, where you can pay with your real estate investments through actual debit cards. So we basically solve the illiquidity, the illiquidity issue within traditional assets such as real estate via the blockchain in a very innovative platform, all under one umbrella, where you can do everything around your finances and basically give the everyday individual, but also institutional investors, all the tools that they need to start building their portfolio.
That's amazing. I love that because, you know, the promise of crypto for so long has been democratizing access to finance.
Yeah.
It allows anybody without asking permission to engage in the financial ecosystem. So I love what you're doing. Can you tell me a little bit about how it all works? Do you do commercial real estate? Do you do residential? Is there a fund manager? What's the kind of what's the flow look like?
Yeah, so our CEO that we appointed a couple of months ago is the former CEO of Remax England and Wales.
Good guy to have on board.
Yeah, and he stepped down actually at Remax to become our CEO. So he saw a lot of potential in us, and also the backing that we have, the deal flow that we have, the biggest community in tokenized real estate. And the man has billions of dollars of deals of real estate under his belt in the past decades. So he's able to get these off-market opportunities, very unique developments, for example, across the first casino built in Ras Al Khaimah at the moment, across the Wynn Resort. We got a piece of that, which we're going to offer in a couple of weeks to our investors. But he's basically able to get these off-market opportunities with a focus on residential, but it could also be developments, industrial complexes. As long as the numbers make sense, the deal flow is attractive, preferably has a story, then we're able to work with it. And obviously everything comes down to the numbers, the reliability of the asset, and with his decades of experience, we're in very good hands with that.
It's all about giving people options. Normally with real estate, you have to put all your eggs into one builder's basket, which could be a risk. But with tokenization, you could tokenize a fraction of a penthouse in Japan, a fraction of a golf course in Texas, or a fraction of a masonette flat in London as well. So obviously having the CEO of Remax, or the former CEO of Remax, quit his job, which is a huge, huge statement to go from one of the biggest real estate companies to one of the most innovative real estate companies, really speaks volumes. So it's like off-plan holiday homes. We've actually announced a partnership with Melia, which is a massive, massive worldwide holiday resort. A couple other big partnerships we're going to be announcing very, very soon as well. And then everybody, just whether you're Web3 or Web2, in the comfort of your own home, you can just be swiping through the different buildings on our app. It's like a remix between Tinder and Amazon. You can swipe through the buildings, you can click, you can add to cart, then boom, we're making investing in real estate as simple as online shopping. So you can have an access to a massive worldwide portfolio in Web3, tokenized in Web3, but still feeling like you're in Web2. That's the main difference, because we've set ourselves up for that mass worldwide adoption. RWA is not just about crypto users, it's about the world, and we're doing that.
So if I'm understanding you right, rather than investing into like a traditional REIT, where you've got a fund manager who's just buying a bunch of stuff and you have no control over it, you have the option to choose which projects and which developments and which real estate assets you want to go into. Is that right?
Exactly. We're giving the full power and the full control and full freedom to the users.
Amazing. I love it. Where are you all at today? What's the phase of your development? Where's the project at? How can users get involved?
So we've recently just launched. We launched on Kraken. We launched on MEXC. We launched on HTX. We did really well. We're actually very proud to say, one of the most successful launches of the summer.
Congratulations.
Thank you. We did over 30x, and we're stabilizing at around about 4x right now. And we haven't even launched our L1 RWA blockchain. In several months towards the end of this year, early next year, we're launching our L1 RWA blockchain. So the upside for EstateX is phenomenal. So you can go to our website, estatex.eu, that's estatex.eu, or follow us on Telegram, EstateX Official, or go to our Twitter, which is also EstateX.eu, and obviously, follow the journey, invest as well, because obviously now is a very, very, very good time to get in. Everything's correcting in September, and like we said before, with the use cases that Bart mentioned, the L1 coming out, and many, many other verticals that we're going to be getting into, tokenizing sports teams, tokenizing multi-platinum selling music artists, there's a lot of upsides, so it's a good time to invest.
Great. Thank you, Bart. Thank you, Steve. We appreciate it.
Thank you.
EstateX.eu. Check them out, guys.
Cheers.
Thanks, Bart. Cheers, Bart. Thanks, Steve. Yep. Up next, we have... Who is next? What's up, Rock?
At some point,
yes,
we need you to put your top. The beer situation of that GPUs are in shortage and prices go high. It's not really the case, and it's sort of pigeonholed a lot of development. We're seeing amazing open source models being put out in smaller and smaller context token models, which is doing some really cool stuff. So on the open source side, we're seeing some really cool advancements, but really what we're doing is the other side of where we're making money is we're divesting after 4 years a project, so we can invest in 1,000 projects, and with one project unicorns, over the next 10 years, we're divesting, we're making 10 times as much as what we put into 1,000 projects.
incredible. So, where's the token at today? How can people get involved? Can somebody who has a GPU sell the compute to you, or how can people watching at home, or how can people in the audience, how can they get involved today?
So if people want to get involved, the one thing we're doing OTC because we're a utility token. We are MICA certified now. As of 3 days ago, I could publicly announce it.
Congrats, amazing.
We're number 269. I like that.
Good stuff.
Yeah, so, but no, we are a proof of authority network. We run a chain on Cosmos, Manifest. So all of our data centers are SOC 2 compliant ISO facilities. So the way our node program works, we have over $50 million worth of hardware. Is people can come in, give us the money, we get the hardware, install it, they get all the receipts, they get the ZK proofs that it's running, and then we rent it for them for the next 5 years by paying them a token. And so that's how some people can get involved, but really all our token is burning it to pay for compute. So I like to say we're the chain link of inference.
Very cool. What's your website? How can people follow you on socials?
So socials, Manifest AIS, because Manifestia was already taken. But Manifest AIS, I am obviously Player One Taco. Come find me. We have stickers. You can find us anywhere. We'll be here in KBW and in Token. And I think, are we going to be on the deal desk?
I think you may be on the deal desk.
I think we're going to be on the deal desk as well.
DNA deal desk.
Yeah. So the DNA deal desk as well.
Taco, thank you, everybody.
Thank you, everyone.
And Chandani. Okay.
Hello. Hello. Shh. Sorry. But you know what? These guys are up here trying to talk, and you guys are so loud. And so it would be really awesome if you wanted to have a conversation, maybe go out to the hall. We have a very important panel coming up right now. Chandani is going to go ahead and introduce it.
Okay, so again, just to echo what was said right now by our beautiful Marcy, can I have everyone's attention, please? Can I have everyone's attention, please? In respect of yourself and in respect of our guests, please, I do beseech you to please lower the volume so that we can have our next incredible conversation happen, and I'll hand it over now to Joe Ross. Thank you.
You definitely want to hear this one. We have Katya from Own Network. Come on up. Yes, there we go. Katya, welcome. Great to see you again.
Thank you.
This is our second interview.
Yep.
Own Network is one of my favorite projects I've seen in quite a while. Can you tell those in the audience who do not know what is Own Network?
Yeah, so Own is a decentralized social media platform like TikTok, but you own all of your content and your audience, but it's also gamified. So meaning every time that you post a photo, a video, or do a live stream, the users on the platform upvote and downvote your content, and there's a leaderboard within different categories where everyone's competing on a weekly basis to be the top creator on the platform. Now, why is this important? Well, right now there's a huge gap in content creation, the creator economy, obviously IP, but also with brands and advertisers, because creators are the new media and the new brands, and there's so many fake bots and users that are continuously bought that advertisers are having a hard time to partner with creators to be able to advertise properly. So because our platform is completely bot free and there's a ranking system per creator, per category, it's a great way for them to leverage our platform with those brands and advertisers on Own.
That's amazing. So you've got some pretty big competition out there with companies like Meta and TikTok. How do you plan to go to market and really start to eat into their market share? You know, it's kind of like David versus Goliath.
Yes, well, first and foremost, try to hire the best team possible. My co-creator is Sarah Mix. She created Tinder and Bumble. She invented the Tinder swipe. We just hired Jonathan Maxime. He launched TikTok in the US, so made it really big in the US. So it started there and started obviously before then to create the best product. But what I really believe is timing. Timing right now is that a lot of creators are not making the money that they used to make before, and there's a really big gap over there. Before they used to be able to quit their day job and actually be a content creator full time, the algorithm and the monetization structure not only changed, but also is not accessible to 1 billion creators worldwide in emerging markets that have the exact same audience and following as US creators. And what we're offering here and how we're competing with the best team to take it to market, and within our partnerships like Wall Street Bets and a lot of these agencies, is providing global equal pay and being the highest payout platform to all content creators. Yes, we're decentralized, you own all your content, which is so important. Obviously, that's why we're in this room. But let's get real. A 16-year-old content creator doesn't really care. So let's pay them right. Let's provide them the right accessibility and opportunity like any creator, so you don't have to be a Kim Kardashian on our platform to make money or get the proper visibility.
So if I hear you correct, you're saying that people can actually make more money on Own than on what I'll call the legacy social media apps. Is that right?
Yep, up to 50% more, depending on the region, even 100% more, because some regions, they provide no monetization for that content creator. For example, Africa, Canada, Latin America. So that's a big, easy stepping stone. We're just DMing creators, and they're just willingly willing to join our influencer program and get on our platform. So it's a really exciting time for us and the whole industry.
Amazing. You and I were talking earlier. YouTube and Google just announced yesterday that they were going to allow the people that they banned for political speech during the previous administration to come back to YouTube. Obviously, your name is Own. I assume that people own their own account. They own their followers. How do you see that playing into this? You know, how do you think that, self-sovereignty is going to become, something that people actually care about, and how does OWN solve for that?
Well, it's the core of our values from day one, and it's something that we've been leading with and talking about. And I say kudos to those platforms for coming out and saying that. Obviously, they followed Meta, who first announced that. So I think, one, that's a great step forward for the whole industry as a whole. We've been talking about this from day one because everyone should have their own opinion. Whatever, left, right, freedom of speech. Of course, there needs to be a limit in terms of sexual content, accessibility to pornography to children, and so on and so forth, right? That there needs to be a limit there. But, I think that it is a great way to step forward. But, for us, is they've seen platforms like us starting to take their creators from their platforms because we can't demonetize you. Even if you do get banned on our platform for crossing those lines, you still keep all those content and followers, and you could bring it on to a YouTube or other platform of choice, so we don't take that away from you. But that did help us go viral a couple times.
That's so important because so many people today who are building their lives and building their businesses on social media, they don't even really own it. They're setting up shop and they're setting up their business in a platform that they have no control over. They have no ownership. So I love that you all are solving for that. Where are you at today? Where is OWN at? And how can people get on the platform? How can they get involved? What are you all doing today?
Yes, so we're live in beta right now. You can go up front and scan the QR code to get on the app.
Grab some merch over there.
And we actually have a Korea Blockchain Week competition for, if you post something in that category, we're giving away free tokens and cash rewards for the top 3. So please download, post something, and we will reward you by Sunday, whoever's the top 3. And in October, we are going completely live with live streams and monetization with fiat, so you can tip on content and live streams. What's really important, Joe, is that we wanted to make sure that we first built a product before we launched a token or even talked about a token, because if we want to be the next mainstream decentralized platform, we have to first build a product that is so grammar-proof that anyone could use it, and I'm happy to say that 90% of our users are Web2 influencers that have no idea they're using a decentralized app, which is super important.
I love that.
Yeah, so by the end of the year, as you know, we're one of DNA's portfolio companies. We're going to be launching our token, which is our tokenized creator fund. People are already earning on the platform, but expect that announcement in the next couple weeks of the date, but really exciting time.
Katya, thank you so much. We're really honored to be working with you. One last thing. What's your social media? What's the URL? Where can they find you?
Yes, www.ownapp.co, and our Twitter's at ownapp_, and me, it is Katya Zaitsev, so at Katya Zaitsev_. Thank you.
Thank you, Katya. Who do we have next? Thanks, everybody. Chandani?
See, it was a lot quieter.
Thanks, Joe. Okay, all right, so moving right along. Can everyone hear me? Yes? Can I hear a unanimous yes? Yes. Okay, so now we're moving right along to our next panel, which will be the future of capital markets, where institutionalized capital meets Web3. And that's happening right now in the history of Web3. So I'm sure you're all very excited about it, a little bit nervous, and wanting to find out more. So I would love to have Sergey, our incredible moderator, to please take the stage. And round of applause, Sergey. And I'm going to have Sergey introduce the guests. It's right behind you. So take it away, Sam. Sergey.
Yes. Hey, great to be here again. Team Daryl and Andre, please join the panel. We have an incredible panel here, and I can say, hi. all right? Andre, Tim, and Daryl. So they all represent different
Andre, nice to meet you.
different parts of the institutional adoption ways, and this panel is almost an anniversary. I've had a very same panel in March in New York with Anthony Scaramucci, and we called it from Wall Street to Web3, right? So, guys, can you tell me the single biggest reason that institutions should embrace Web3? Just one single biggest reason. That's question to each of you.
Single reason, capital efficiency.
All right, capital efficiency.
Transparency and reliability.
Okay.
One word, liquidity.
All right. Wow, that's the diverse response from the panel, and Andre is really representing institutional capital, Makina Finance Liquidity Solutions, and Thrive Digital is a venture ecosystem building. So it's interesting how each of you defend your own domain, which is very good. So first question to Andre. You work with institutional allocators daily? Can I say daily? Maybe every minute? What's the most convincing use case they are seeking right now?
So we are maybe slightly less. Our institutions that we work with are not DeFi funds. So what Wellspring does, what we do, is making it easy for normies, non-crypto, non-DeFi people get deep access to DeFi yield. So we give people and institutions an ability to wire money into a traditional bank account, and that goes into a self-custodial wallet and into high yield strategies powered by different ecosystems, mainly hyperliquid. So it's something that smaller traditional non-crypto family offices did not have the ability to do just 6 months ago. So since we launched our platform, we saw a great influx of an interest of institutional capital, ranging from funds to mom and pop's businesses where they have a couple $100,000 laying around in their business bank account, and they want to make it more efficient, and capital efficiency becomes available with Wellspring because they get 12% yield on their deposits.
Yeah, Andre, for our audience, can you please describe in a few words what's capital efficiency? Because we always talk about these terms, but what's it?
So I think the example that I like to give is you bought Bitcoin 10 years ago. That Bitcoin is worth $1 million now. If you were to sell it and you're based in the United States, you're subject to capital gain taxes, and that's a heavy tax in the United States. So what the new DeFi technologies enable you to do is put it up into a smart contract, and you can borrow against it. Now all of a sudden you still have the upside on your Bitcoin. You have access to 70% TVL, which enables you to do a lot more than just having your Bitcoin sit there, and you're paying usually you're able to make money on that. So not only you get huge amount of capital unlocked, you don't have to pay taxes, and you get to deploy it more.
Got it. I hope all of our participants today already do that. That's exactly how I do it. So thank you for explaining that. So, team, institutions like depth of liquidity and predictability. how does DeFi liquidity, Web3 liquidity is going to satisfy those requirements?
Yeah, I think to be clear, the target personas that we're working with, it's actually more DeFi funds, which I know you don't target as much, but also digital asset treasuries, foundations, DAOs who have a need to really deploy their capital on chain, just because of the points I mentioned, transparency and reliability is extremely important to them. So, for example, if a DAO raises, $40-50 million, right? They have no way to put this strategy even in a fund structure, a traditional fund structure. They would need to put it on chain to generate a yield. But the foundation or the DAO itself, their main mandate is not to generate yield on their treasury, so they need to look for different solutions out there. If you look at the space right now, you can look at Morpho Earn vaults, you can look at maybe some Upshift or Veda vaults. A lot of it is very scattered in terms of where the liquidity is, and the optimal yield that you would generate from that is actually not very, very high. And there's a issue with scaling that capital. For example, I can get maybe 12% on $10 million. But if I were to talk to a $40-50 million ballpark, that scale, that the yield there reduces. So the vision behind Machina to kind of get the liquidity, reliability, and transparency behind it is that we've developed a product that allows asset managers. So this was developed in tandem with Dialectic Group, which is a Swiss asset management fund that manages more than $300 million in assets. Like, they have these yield generating strategies that are amazing, but it lives in a traditional fund structure. There's no way for them to bring that fully on chain for you to track your NAV, to track your accounting, to track your compliance, so on and so forth. So the vision behind this is like we've worked with every major risk curator that you see on Morpho. Everyone is very interested to bring this capital on board because they can find liquidity in any avenue that's EVM compatible, and they can do this all by themselves without having to get a infrastructure provider to give them the rails. We built everything so that they can do it hands-on themselves. So to that end, they'll be able to generate every strategy that comes out. For example, the most exciting Katana strategies. Plasma recently launched on Maple, Zero Finance, and they're giving amazing yields, right? But if the infrastructure does not prioritize that, they would have no way to get that yield. And then they would have to wait on traditional board structures to give you that access. So to that end, what we've built, envisioning one of the DATs who's coming on board, recently launched, they want to generate yield from us because you can see it on chain. All your results, NAV tracking is on chain, so you have reliability and transparency there. But on the other hand, they are not limited to liquidity on certain positions only. They can tap into anything they see that is EVM compatible. So that's our broader vision, and that's the validation we've got. Every major risk curator is very interested in using our product, and we'll be bringing this live in October.
Yeah, thank you, Tim. We have to be a little bit more like rappers and speak directly to the mic. That's how they pick up the voice. So, Daryl, question to you. Tokenization has been called a gateway for institutions to embrace Web3. What's the asset that should be tokenized and has a lot of demand to be tokenized? But don't say T-bills. Something else. I'll make it a little bit harder.
I think at the end of the day, I used the earlier word liquidity, right? It's any illiquid assets that is directly accessible only to accredited investors. That's the whole idea, right? Because if you're offering the same products to AIs and IIs, there's no reason for them to go for you besides, transparency, right? But you want the retailers in the Web3 market to have access to all these different products such as factoring, invoice financing, private credit. All these are products that, on the retail side of things, you would have never experienced. But they are generating anywhere between 12 to 60% API and are generally considered low-risk assets. So for tokenization to work, it would have to target these kind of low-risk assets itself that would satisfy the returns, but also at the same time are able to manage risk better. Because at the end of the day, why is it that Web2 TradeFi folks are still not coming to Web3 is because of risk. But if it's something that they understand, something that's a little more tangible, that they're more used to, I think that's where we're able to slowly transition them over itself. And that's where we get
there's a much larger market coming in. So that's the way I see it. Yeah.
All right, yeah, it's good to have transparency. It's good to have all this stuff on chain, but institutions are asking like, who's gonna create the rules? Who's gonna enforce them on chain? So that's the big question that is still up in the air. And Andre got asked a question like, where's the yield coming from? So we talk about 12, 80%, 60% yield APY, but it's like, that's great. What's the downside to that? What's the risk? Where is it coming from? It's coming from Hyperliquid, great, who's creating rules, enforcing them. So those are important questions for coming from institutions. So Daryl, you invest in projects that are building for institutions.
Yes.
So what separates the winners from those in whom you don't invest?
Okay. This is gonna. This is not financial advice.
Some real alpha happening.
But if I'm an investor of you, my approach is always test the market, and that means you self-regulate and start operating even without, having a license from day one. Because the thing is, like what you mentioned, you don't know the rules. You don't know who sets them, how it's being, regulated, right? And markets differ between markets. So the thing is, just go out there and start operating, start getting TBL, and start testing a product with the market to see how they react. And then find a target license that you can acquire, and then kind of proceed from that itself. So that's the way we look into a lot of these target segment with programmable money. So any project that looks into tokenization of assets itself, that's the kind of advice that we give, which is just go out and start, launching your product in the market. Don't be afraid, right? Because if shit hits the fan, you can always recluse yourself, right? But at the end of the day, it's about self-regulation. So you audit yourself. If you're like doing stable coins, for instance, start attestation on your own. Conduct KYC and KYT on your own. That's the thing, right? So you self-regulate so that you don't, people don't view you as too black or too gray itself. That's the way I kind of get people to approach the market.
All right, team. Web3 settlement is already dominated by stablecoins. What will it take for institutions to fully embrace stablecoins or CBDCs? I know there is a huge discussion about CBDCs and its viability, but from your point of view, why, how, and when institutions will embrace stablecoins?
That's a tough question, honestly. Everyone's consideration is slightly different, right? Like if you're a payments infrastructure company, the efficiency there is undeniable. What you do in stablecoins versus what you do with fiat transfers or even currency conversion, right? But in terms of the investment side, I think regulatory clarity is extremely important. Like what it looks like if you were to do a CBDC, which is a tokenized version of a currency, or if you were to just settle in USDC, which is a USD denominated stablecoin, what does that look like in terms of compliance, regulatory concerns, efficiency? I think it's just no doubt fees, speed, all of that. Like there's just no way a traditional settlement will be better than that, right? I think the only thing that's looming in the air is the regulatory concern and how they were to implement it, your on-ramp, off-ramps for the end user on the company side or the infrastructure side. I think those are probably the biggest things that are in consideration in terms of how to solve that to use that at scale, right? On these pilot programs, sure, you can put out all these numbers of what you're doing, the transactions you're doing, the speed, JP Morgan and what they're doing in their own chain, like everyone is testing it out and understands the value proposition. And the fact is, the settlement is just a lot cleaner with all the on-chain data, as opposed to money flowing through obscure different parties and at the end arriving and somehow doing the accounting in between is a nightmare, right? So, I think to one of the points that Daryl mentioned, we're working with Apollo Credit Fund because they have a bunch of products that no accredited people who are non-accredited investors do not have access to. So on their end, they're trying to figure out, or they've taken a leap ahead, along with the likes of like Franklin Templeton, Fidelity. I know these teams very, very well. I think considering where the regulatory landscape is, a lot of them are taking a foot forward. Obviously, with protections from different entities they spin up for these days. I think the earliest pioneers could be Nomura's Laser Digital. They've been early in the space. Susquehanna's SIG has been, spinning up different trial entities for them to get their hands wet in crypto, right? So as long as I feel like the regulatory clarity is there, I think the product efficiency, there's just no doubt about that. It just comes down to how you package it and sell it to the end user, or whether you use it only maybe as an internal tool and your internal compliance team is comfortable with that. With that being said, I think it's a matter of not, it's not a matter of will it happen, it's a matter of when it will happen.
All right. So, crypto is 24/7. Institutions are running on cycles. There's only one industry that has its own holidays, banking holidays, right? In Web3, we don't have holidays. It's not like, oh, today is blockchain holiday. Blockchains are not working. So, exactly. So there is no napping, lunchtime. Andre, what do you see? How institutions will adapt to this 24/7, or Web3 has to slow down?
So the short answer is institutions. That's why institutions should use Wellspring, because we work 24/7, unlike the banks. So that's the bit. But I really think that the banks, I don't see the banks having their branches open 24/7. But I do think that under the hood, as banks integrate more stable coins, like I was just saying, and more blockchain, which, for example, JP Morgan has been doing that for the past really decade almost. So it's happening. They will be, the database movements or blockchain movements will be there. They will be, the goal is to have someone handle it who knows what they're doing, who's, and actually maybe another thing to add on the regulatory piece that what Daryl was addressing is how we structured our reasoning behind regulatory or not regulatory. We don't know what the next law that's going to come out. So the way we approached it is we give people an ability and institutions an ability to go either fully self-custodial, or we have a partnership with a qualified trust based in the United States that handles all of the money movements, and that allows us to remain compliant so we cover just as much ground as possible.
Yeah. Last question to Daryl. So you're based in Asia. Which jurisdictions here balance well regulatory and innovation? So top 3 locations.
I would say Hong Kong. Taiwan is up and coming, right? Even though I know Singapore just did a culling recently, but I'll still put them as a top 3 because at the end of the day, what they're trying to reduce are bad players. So these 3, I would say they have a good balance between regulations and innovation itself. But I think the market you want to look at in Asia is Taiwan.
Yeah. All right, so the question remains to institutions whether you guys wait and see while it's built, or you join the Web3 movement and help to create the industry. Thank you very much.
Thank you. Thank you, Sergey. Yeah.
All right, guys. Next we have Joe Ross, venture partner at DNA. We'll be interviewing Robert Hirsch, the CEO of Continuum Protocol and Scalix. And the spelling is a little off, but that's all right. And then, guys, next, everybody, next, stick around. Yatsu from Animoca will be up next. So stick around and give these guys some attention. Thank you, guys. These guys.
Thank you, Rock. If everybody could, please quiet down just a little bit. You definitely want to
Quiet
hear.
down, please.
You want to hear what Robert has to say. Trust me.
Thank you.
Robert, great to have you here.
Thank you very much.
A
I
little
appreciate it.
backstory. Robert Hirsch here is one of my good friends from Puerto Rico. The first person I met when I moved to Puerto Rico back in 2018.
That was a long time ago.
We go way back. So,
Yes.
Robert, Scalix, in 30 seconds to a minute, what is Scalix?
Sure. Scalix has a technology that allows layer 1 blockchains to talk.
Speak into the mic.
That allows layer 1 blockchains to talk directly together. So our mission really is to get rid of bridges. So this technology we want to deploy to all blockchains. And once we do that, we can have a different kind of crypto experience where every chain is connected to every other chain. And that means businesses can focus on their own chains and connect to the chains they want to connect to seamlessly. So no more liquidity silos, no more bridges, no more intermediaries. That's basically what our focus is.
So, as far as how it works, is there like one underlying chain, or are there like multiple different things connecting multiple different blockchains?
Right. So a lot of people go to think like maybe we're a layer, or maybe we are a chain, you got to connect to us to get to something else. The key is that we have a technology we want all chains to have, right? And so when all chains have this, or each chain that does have it, it can connect to any other blockchain, but we're not in the middle of that. It's those validators connecting to the other validators, and we're not in the middle of it. And so that's what we want deployed. So there's no layer.
No layer zero, so to say.
No layer zero. I hate that they took that name because people think infrastructure is a layer zero solution, and then they stole the name, and now it's all confusing.
Yeah. Kind of like we were talking about earlier, there's certain friction points in crypto, and bridges happen to be one of them.
Yeah.
You know, it feels like every other day we hear about a bridge hack, billions of dollars being there.
Just yesterday,
wow.
a big one.
Yeah, I didn't even hear that. So, what sort of made you realize that this was something that you wanted to solve? You know, you're a really smart guy. You can do a lot of things. Why this?
It didn't go that way. My CTO came to me and said, in weird nerd language that I didn't understand at the time, he said, I have this thing, and after about a week, I realized what he had solved was bridges. And so I'm like, hey, we need to do this. And so it came from the technology first, and then we're solving that. And then there's a whole bunch of other things that we solve. Matterfy, who was up here before, they solve like the front end of crypto. By connecting bridges together directly, almost all our other issues in crypto get fixed. And so between the two, I think DNA has a good set of companies.
We sure do.
Yeah.
Where are you all at today? You know, what phase of development are you in? Could Solana deploy this today? Could Sui deploy this today? Where are you at?
Okay, so we are very early. This is pre-seed. So investors, this is pre-seed, early to get in to a fundamental change, positive change in crypto. But we still have two things to complete. One is the full ZK messaging protocol between. Finish that up. And we intend on all the application-specific chains that we make, they're all going to be quantum safe. So those two things have to be fully deployed, and we think that's going to take about a year.
So you're about a year out. A year out from mainnet, so like full launch in about a year?
Right. So yes, maybe on the mainnet. So to be clear, we know we're missing this cycle, and we have to decide as a company when to actually come out with a TGE. So Probably not in a year. We'll be functionally and technologically there, but we need to wait until it's smart to come out.
Got it. So you mentioned a TGE. With the structure of your project, can you tell me how a token fits into that? You know, where does the Scalix token? What's it gonna be called? What's the function of it? What does the Scalix token do?
Right. So we want all blockchains to have this, but we're the first to do it. So we're going to have a layer 1 blockchain, and intentionally, that layer 1 blockchain doesn't do anything. It's like Litecoin or Bitcoin or any other UTXO style blockchain, and we're going to connect it to all the applications that we build. The fee token on the different blockchains, they're all the same fee token. So that's a new thing and a different concept. So when the fee token is the same on different blockchains, we do something a little bit different. The idea here is you don't need to have a utility token. We never needed one. Utility tokens are really to help investors invest in things and people raise funds. We separate that. We say, look, let's do all the utility in the fee token. So that's for all the chains we build and our partners build, those will all be Scalix. All ZKX is what we're shooting for. All those fees will be Scalix. And then let's have investor tokens that attract fees. So if you're holding an investor token, it's almost like you're getting fees as airdrops. And then I sell you the investor token, I don't get fees anymore, you do. So it's a different concept about how the crypto economy should work.
What sort of traction are you getting, and what steps do you need to take? What's going to happen to get you all going in the marketplace? You know, there's a lot of competition out there. How do you differentiate yourself, and how do you position yourself for success?
I'm going to say this very confidently. I have looked at 104 bridges, 104 people that say they're trustless, 104 people that say that this is the best bridge. And then tomorrow when a new bridge comes out, it'll be 105. More bridges is not the future. Eliminating bridges is the way to go for our entire industry. So that's how we're separating. We're not a bridge. We're not anything in the middle. We're not anything that users need to look up to figure out how to get from here to there. If your blockchain is connected to that blockchain, you can just send it, just like you send within the same blockchain. So really that's the differentiator. We are not something you need to know about in order to do an interchain connection.
So it works behind the scenes without people having to know they're using it. That's great.
They'll never know.
Wrapping up, what can people do today to get involved? Are you doing a TGE? Are you raising money? How can people get involved today?
We're raising money. We're in our pre-seed right now. Please come to me if you're interested in that. There will be more, and as I said, I don't think the TGE is going to be for a while. So we have different investment plans, if I can call it that. But yeah, so we're doing that right now. So if you guys want to come talk to me, please just find me. I'm the bald guy. I think I'm the only bald guy.
Find the bald guy, write him a check. Thank you, Robert.
All right, thank you.
Up next, I believe we have auto games. No, we have Plank.
All right, I'm going to leave this here.
Diem. Do we have Diem in the house? Diem Hamstra. Paging Diem. No Diem. Who is next? Do we have a Diem? I've not seen Diem. I know what he looks like. Marat, that's what I thought. Marat, Auto Games AI. Do we have Marat in the house? No? Rap? I was supposed to have another interview. Yeah. Who are we looking for? Marat? Marat from Auto Games. Marat. Marat from Auto Games AI. Are you in the house? Paging once, paging twice. Marat. Marat. Diem Hamstra. Paging once, paging twice. Are you in the house? Okay, I think we're going to take a quick break. I believe up next we have the one, the only Yatsu. So please stay tuned. Yatsu coming up next. Thank you, everybody.
ask Sam to come. I'm going to get him. Sam, please come here and have a seat and introduce yourself before I bring your incredible guest to your attendance.
So yeah, I'm Sam Reynolds from CoinDesk. I cover crypto in Asia. So that means pumps, dumps, Bitcoin, shitcoins, Web3 gaming, everything in between. I'm not very interesting, but Yat Su is. So we'll just wait for him to come out. And I'll just sit here quietly. Yes, yeah, CoinDesk. I like your socks though, the Bitcoin socks. That's pretty sweet. Yeah. Are you with American Bitcoin? Is that why?
No, but actually, we have someone from American Bitcoin coming in.
All right. Yeah, Sue, the man of the hour. Good to see you again. Sit here. All right. So, hey, how's it going? It's been a while. Saw you at Consensus in Hong Kong in February.
Yeah, I mean everything. Can you hear me? Can you hear me?
No.
Got to turn it on. Got to turn it on. All right.
There
Okay.
you go,
Fine.
yeah.
Yes. Yeah, it's been a while, but everything in crypto. 1 month is like a whole year or so.
Yes.
It feels like we haven't seen each other for years. But nice to see you again.
Likewise.
Yes. Okay.
So, what is AI and gaming? I guess that's the topic of today. So.
Oh God, it's so many things. Where do I start? I mean, first of all, I think slightly louder. Do I need to shout into this? All right, fine. So first, I mean, on the gaming side, clearly there's a lot of development tools that are out there. But what I'm most excited about are two things. One of them is vibe coding. So vibe coding is big.
Okay.
Because of course anyone can now code their own games with AI.
Yeah.
It's reached kind of, if you remember back in the day when people were having really bad Instagram filters, but everyone's kind of excited about, and it's very much sort of pushing the whole creator economy.
So I guess with then vibe coding, you can have it so that amateurs make their own games,
Correct.
right? So
Yes.
gaming is not then confined to these big studios. It can be from indie people, right? So
Well, it's not just indie people. It's like imagine, like I see it as a different expression. So imagine, for instance, if you're handing in your homework as a school kid, you might actually hand in a game where you can experience or you can simulate or you can do something. So we shouldn't look at gaming simply as a realm of fun and entertainment, because actually some of the earliest forms of simulation and the understanding of simulation came from gaming. And in fact, when you think about NVIDIA's discovery of actually the real use case for GPUs and sort of floating point operations came not from the fact that I can play a great game that was fun and that's prior use case, but that you could actually now see that you can simulate real life, essentially, with ragdolls and so on, and motion initially for different applications, which then eventually evolved into things like AI compute, Bitcoin mining, right? That all started from that. And so I see that as that evolution. And also see it as something that you can go get deeper into. So it's not just about making more games, but it's about how gamification, which, if you think about it, gamification has already impacted so much of our own industry and everything else, but really more from a, call it game psychology standpoint. But now you can actually implement these tools inside everything that you do. And for me, gamification is more than just the entertainment side. It's also, can you make work more fun? Can you make learning more fun? Can you make life more fun, right? And that basically is, but what you could do is you could take that deeper into other areas and, like I say, extend that. The other thing, of course, when you talk about AI, is agentic AI.
Yes.
And what most people may not realize is that the form in which most people interact with AI is not ChatGPT, even though it's very successful. It's actually NPCs, non-player characters inside games. But it's the worst, dumbest kind of AI you can think of. The reason why is because cost of AI is still too high for a game to operate like a even a small kind of LLM for the time being. But as the costs come down, and particularly when you talk about token economies, where people can start paying the AI, two things will happen. One, games will become much more immersive as an experience. But two, the actual AI agents inside those games theoretically can become independent themselves. So when you start marrying some of the blockchain technology, things like NFTs, where you can now own an AI that can live inside other games, that can be independent, that can basically be agentic in nature, then that's actually where it becomes even wilder. And the wildest part about all of this is that, of course, if it's an agentic AI, it can actually issue its own tokens, right? Which means that they have the ability to create their own money, which means that they have the ability to pay people or to do stuff. And if you want to extend it even further, you can kind of see where that goes. And an interesting stat over the last 4 years, protocols and Web3 games and everything in blockchain paid out about $50 billion roughly in airdrops, which is a big number. But what's the difference between a protocol and an AI agent paying you? For the user, no difference whatsoever. Right. So we're already accustomed to be paid by things or units that we don't know, that we never interact and see. So if an AI agent is paying you tokens that it created because it launched it on pump.fun and it just suddenly worth $100 million, or whatever that might be, right? Who's to say that you're working for an AI now? I think that's kind of the future, whether you like it or not, right?
Okay, so how about then Animoca? Like, what is your role here? Do you want to incubate this, invest in this, and you guys primarily invest in crypto companies. Is there then a crypto angle to invest in?
Absolutely. So there's two lenses. One, we've invested today in probably over 60 AI companies that are sort of working either directly or adjacently in the space, and we think all of these are important. That's kind of one way that we're engaging this. Of course, not just for gaming, but for other things as well. But broadly speaking, I would argue that for most people, investing in crypto is the natural hedge to an AI future for most people. Now, why do I say that?
How so?
Yeah, it's because when you think about in the physical world as humans, our scarce and natural resource is the land, is the place we're in, so real estate, or maybe commodities that we use to produce stuff, right? But what is the commodity that is used in AI? Sure, it's electricity and it's compute. How is it represented? Through crypto, through tokens. Now, which tokens is another question, right? But the point is that the real estate, as it were, the assets of agentic AI is going to be crypto. And so most people are not going to have the ability to invest in OpenAI or ChatGPT, and who knows if they succeed in the long term, or Perplexity. It's also difficult for them. So, for instance, when you are living in the physical world, how do you partake in the success of a nation or the growth of something? You probably buy a house in the area, or you might buy some bonds or your stocks. It's your index of the environment that you're in. Well, the index of that environment is crypto. So that's actually another thing that I think all of us here who are in the crypto space are inadvertently, whether we like it or not, hedging ourselves against an AI future.
But what crypto though, right? Is it Bitcoin, Ether, or is it like a BitTensor? Not to endorse one token, but when you say AI equals crypto, it's a very broad statement. Like, is there a certain subset of crypto? Is it crypto broadly?
I mean, you're asking me to say kind of like, it's kind of like asking the question 1,000 years ago, do you think land in Africa will be more valuable, or land in China, or land in Europe, right? That's kind of the question you're asking. I think one thing that is different though, but that we can measure better today, is that the value of a token comes from the network effect, right? And so what AI does is it has the ability to enhance these network effects because you're using it. One very simple example, which is a very primitive form of network effect, is the tradability, right? I mean, the fact that we can use money around the world, it adds a network, right? In fact, money is the original, I would say, probably the original big social network, right? It's because of money that I can do business with someone around the world, I can trade, and from that I can build a relationship with. And that's basically what AI agents will do with crypto in an accelerated fashion, right? And so they can help build those. So then, of course, you might say, let's go for the biggest network, right? So let's go with Bitcoin. That's one element to look at it. But we are so early in this space, right, that we don't really have a winner. I have some views around Bitcoin as well, but that's a different story.
Please, you've got the stage.
I don't know who's controversial or not, but to the point about AI, is that I think having Bitcoin long term, you're fine, but Bitcoin is like gold, right? So today, gold is the largest single asset and has been really since forever. But there was a time when gold was the single largest asset, period, like hundreds and hundreds of years ago, right? Today, gold is the largest asset, but in comparison to all other assets in IP, in listed companies, like for instance, the value of public companies today is about $128 trillion, which is pretty respectable. And gold is around 24 trillion, or well, it's gone up again, so who knows, right? But either way, right? So gold is larger than Apple and Facebook and Google, but it's not larger than the entire market caps of companies combined. So you take that lens and you say, okay, if Bitcoin is gold, what about altcoins, or shitcoins as Bitcoiners like to call them, right? Well, altcoins represents the innovation index because we're building on altcoins, we're developing on them. They're the ones that the AI are using as well, right? So That means I don't expect Ethereum or Solana or any one of those tokens to ever be bigger than Bitcoin. However, I do expect that collectively, altcoins, which is today about half the size of Bitcoin, will ultimately be 10, 20 times larger than Bitcoin when we have more mass adoption, but distributed over millions and millions of tokens. Right?
It's not centralized under one token, but a whole
Yes.
constellation of tokens.
Yeah, and the main point on this is that it's this idea of inflation, right? Because of course that's what Bitcoiners hate, right? But the problem is if you live in a deflationary world, you actually will fight over it, and there's wars over it, all that kind of stuff. And if we assume that gold was the only currency in the world, which maybe some people would have liked, right? Then you would actually restrict innovation and growth, because what comes from us as people, our ideas, our innovation, actually these companies didn't exist before out of a finite resource, because our imagination isn't finite. The universe isn't finite. We keep growing children. Broadly speaking, we're expanding, right? And the universe is expanding, so we can't expect everything to just stay put in a single unit. So you need a store of value, but for growth, you basically need something that can inflate and grow, and that's what altcoins represent. I mean, Apple and Google and Facebook were tiny companies, and they have so much value, but they've developed something valuable from really imagination, ideas, and innovation.
The AI doomers say that AI devalues human labor, right? The ultimate resource in the world are humans and our labor. So what do you say to the doomers that say that this whole thing will make us less valuable, us, and our labor?
So, I mean, so it comes from the perspective, which a lot of people in AI, some people in AI say, is that we are just biological computers, right? It comes from the perspective of, well, basically, if a computer is faster at computing, and an AI is just a better human computer, then of course we're screwed, right? Because ultimately, over the longer term, they're going to succeed. However, if you take the view that humans are beyond computing, that life as we are is not entirely computational, then we'll always have some kind of an edge. And so the perspective, call me, I don't know if you want to call it sort of, like a coping mechanism or whatever. But my view is that humans are not just simply computational. And there are some interesting, like if you look at things like Gödel's incompleteness theorem, for those of you not familiar, it's basically, in very simple terms, has proved that the axioms of math cannot be proven, even though they're true, right? And so there's different elements around it. And if you also look at like quantum mechanics, the whole probabilistic nature of, I guess, the universe, if you will, there are elements around nature that seem to indicate that we as humans, and Sir Roger Penrose most famously spoke about that. He's not a big believer in that we're computational, right? And so don't take it from me, take it from Nobel laureates and really smart people. And as a result, I feel like we have more to gain from AI, because AI is the supercomputer that will enhance our ability to do creative things in AI, through AI, kind of in a very primitive way how the calculator made us all good with math. AI will make us more creative and elevate us as humans rather than actually sort of pushing us down.
Okay, then the question then would be, perhaps, can we scale AI, right? Do we have enough power, enough resources, enough GPUs to make sure that every game in the future has an AI component, or every worker has an AI co-pilot on their desk?
Well, I think this is a... Okay,
I think
sorry.
this one's louder, one change.
Is it? No, I think. So I would say the challenge on compute is the challenge on energy.
Yes.
Right. And I actually think that we're getting better and better at energy. If you take a look at China, for instance, today, I mean, China is actually probably the largest producer now of essentially sort of regenerative energy, and is not relying on essentially fossil fuels as much as before, but of course it's accelerating. I think technology will just get us faster there. The optimistic view is AI will help us get into faster, more efficient energy production. Again, whether we get to cold fusion or not, the point is that I think we'll just get into better, more efficient energy production, and as a result of that, we're going to get better with AI. The other thing is if you look at DeepSeek, right? DeepSeek, it is of course technology, but it came from a human observation about how we as humans learn better, how we create expert models, and thereby actually creating a lower cost of energy and computation to create very similar effects. So we have this race going both ways. We're getting better at energy cost, but we're also getting better at being more efficient. And we see this, for instance, in very simple terms with Moore's law, proprietor's law, like all of those sort of technology frameworks that demonstrate that costs will keep going down. So I'm not worried about that we won't get there, whether it's 5 or 10 years, but we'll get there.
Okay, so speaking of DeepSeek, there's an argument to be made that there's now an Eastern and Western AI camp, where you have the Chinese AI jurisdiction and the Western AI jurisdiction. So A, do you agree with that? And B, can crypto kind of bridge that gap? Can crypto make sure that there is a way to use the world's AI algorithms without having to have an allegiance to like one political bloc?
So I'm not of the view that there's going to be one AI to rule them all. And that's because AI ultimately still feeds off human intuition, innovation, ideas. So my view is that actually we're going to have very many AIs around the world that will reflect certain human biases and preferences, right? So there's no question that if you're going to be using ChatGPT, you're going to be getting Western biases because of all the resources that it gets from. But you can't say that those values are necessarily the ones that will translate well in China, for example, right? Independent of the fact that they're obviously separated from each other, there are distinctions between them. And just as we form as communities where we tend to gravitate towards that share our values and ideas, we will gravitate towards using AI in this way. And in many ways, the truth that we seek isn't necessarily ultimate, right? I mean, if you think about relationships, if you think about how we do business, if you think about framing of life, actually, it's not like one rule fits all, right? So I don't think that's the way I think certainly would look at it. What I think the slightly tragic part is that, and we see this with the internet, is I actually think different nationalities and cultures and so on should be using more AI and build them within their own frameworks to preserve those cultures, right? So if you look at, for instance, what the internet has done, yes, you could say it's made the word flatter and more global, but on the other hand, the whole world is getting information from the same sources, right? Whether it's Google or Facebook in many of these places. In my view, for instance, Europe has been entirely colonized by American technology. And it's one of the reasons why we do not have many, I mean, outside of regulations, that's another one, but reasons why you don't have very strong European companies, even though it's got everything else. It's got, super smart people, great universities, good framing, society, safety for the most part. And then you look at Korea, much smaller as a country as compared to Europe, but it ended up having this kind of, let's call it digital protectionism. So for those of you who come to Korea, Google Maps doesn't quite work the way you want it to work because you have to use Naver. But now Korea has a domestic market. It has the ability to compete with Google. It's got their own framing of companies, and it actually has a vibrant digital society that is independent of America.
But that sounds quite protectionist. It's not free trade. It sounds like if you have to protect your own companies to prevent Google from being this hegemon, this market force, they won't grow up and compete with Google.
So I'm an advocate for free markets, but but a free market also requires you not to have monopolies, right? And so you don't have and America unfortunately has failed in its antitrust mission. Probably, I don't know when the last major antitrust thing happened, maybe with Microsoft, like some 20 years ago or something.
Yeah, that was a while ago.
Yeah, it was a while ago, right? So antitrust is dead, and now the corporations have become so powerful and monopolistic, not just with lobbying power, but everything else, that it's just not going to get there, right? So I think countries don't have a choice, but they have to basically protect their societies, as it were, right? And there is still free trade. It's just that you want to make sure that you don't have monopolies entering those areas. Otherwise, you end up having these problems around the world that we see today. And so just to be clear, this entire anti-globalization push that we have doesn't come from the fact, in my view, that we don't have that the world isn't more open or fair in terms of ways it can communicate with each other. It's the fact that we have a small number of corporations that have so much power that they've become global monopolies. And countries can't come together to deal with these monopolies and don't know how to do that. So whereas if we didn't have these monopolies, I don't think we'd have these problems around the sort of so-called fair trade global issues because you wouldn't have the same monopolistic behaviors that exist.
Interesting. From AI and gaming now to fair trade. Okay, so aside from AI, like what else are you guys working on right now? What else is in your labs?
I mean, there's a lot that we're doing. I would say 3 or 4 major topics that we like to see. First, we're very bullish on Web3 gaming next year because of GTA 6, right?
Okay.
So that's something very big. And the reason why I say this is because...
But why GTA 6?
And generally why just gaming? So gaming has broadly been flat over the last couple of years. for a couple of reasons. One, competition with TikTok, obviously from an attention standpoint. Two, revenue for gaming has been roughly the same because people aren't charging more for gaming. So the cost of a game is the same as it was 10 years ago, but the cost of milk is higher, and the cost of labor is higher. So gaming companies have been struggling because they haven't been able to make, in real money terms, more money, right? Meanwhile, the dollar has been inflated 300%, right? So that's kind of the one issue. The other issue, and the other thing is that there's just less babies being born. I mean, that's just the truth in developing countries. So that means you have less. I'm not saying that people, when they get older, do play games, but the population growth of the people growing into that is not. And so crypto gaming is interesting because there's about 3.4 billion people who play games, but there's 3 billion who do not play games, right? And they don't play games because they don't enjoy looking at it or using it. It's just complicated, it takes time, right? However, with crypto, you can now actually be an owner in a game. You can participate in it. So my mom can basically own assets of the games that her grandchildren play, and that's a way that you can interact. So you expand the audience without expanding the gamer audience, if you will, right? So that's kind of one element. Why GTA 6? Well, so tokens generally are mimetic in nature, not just because of the network effects, but because they mimic markets. They're basically the same as stock prices and commodities, right? They're just digital versions of them. So if Trump is hot, then Trump token goes up. If AI is hot, AI tokens go up. Don't tell me that AI utility in crypto is higher than gaming utility. Gaming utility in Web3 is much higher than that, but the narrative in the market of AI is hot. But gaming isn't hot in the stock market either. So what will make gaming hot is the biggest cultural event in gaming ever, which is GTA 6, right? And then the other side effect is that GTA has this thing called RP servers. And so it allows basically companies to run their own crypto rails on these GTA servers. The reason why Take-Two, which is the owner of GTA, has been so negative is because of the previous administration, right? Now you don't have to be as aggressively pushing back on crypto when you basically have a much more positive administration.
Okay, so to your first point that gaming companies aren't doing well because of a lack of ways to monetize these games.
In relative sense.
Relative sense, of course, right? But then if you talk to gamers, they don't like things like DLCs. They don't like things like buying new features. They don't like we're on Assassin's Creed 47 right now, right? But so do gamers want Web3 gaming? Like, do they want to be monetized more? Or do they want things like cool stories, good graphics, and a fun experience?
So I would argue that while gamers are focused obviously on the content and the social aspect, right? Assets themselves enhance the social aspect and is why you actually play games. So there's this thing in gaming called Bartle's taxonomy. And Bartle's taxonomy is a way in which we describe what gamers, what kind of gamer we have. And we put them basically in 4 quadrants, right? There's the killer. Those are the psychopaths who just love to play games to kill people. Okay. And then you have adventurers, and then you have achievers, and then you have social. And the killers are roughly less than 1%, so it's good to know because that means the world is roughly 1% psychopaths, which we see, but there we go. Then you have the achievers, and then you have the adventurers. They're roughly 10% each. They're actually the ones who draw the audiences in. They play the game because they love to achieve or they want to level up, and then they bring all their friends in, right? And the 80%, that's the friends. So basically, most games are basically social networks. If you ask your children, like, why are you playing Roblox? Because my friends are playing it, right? They're not playing it because they just want to get to a certain stage. And so that's actually what gaming is. And now, why do Web3 assets and assetization and tokenization comes in? Because they grease the social engine, right? If I have something that is an asset, people pay a lot of money for these skins. Why do they pay a lot of money for these skins? Because it's a social attribution. It's something of value, right? And I get to keep it. And now I can keep it forever, for instance. The reason why, one would argue that gamers don't like it is more of a Western narrative, right? And that Western narrative comes from the fact that most people in the West, especially younger people, are not very attuned to capitalism, and they're generally more on the socialist side of things, having not grown up in a life of plenty, not having to worry about food on the table like our parents did, and take that for granted. Go to Asia, actually, you're in Korea. You have a lot of young people. They're crazy about crypto. They're crazy about blockchain, gaming, and crypto. And the reason why is because they're both young, dynamic, and they love capitalism, right? And I think I've said this before, but the American dream is much more alive and well in Asia than it is in America, right? For that reason. So I think this NFT and crypto thing in gaming is more of an attitude towards capitalism and financial literacy, which is a different topic, but it's something that we have to deal with.
Interesting stuff. All right, to wrap things up, what is one forecast you have for the next year?
Oh, I think we're going to get to 1 billion people holding crypto. That's probably an easy forecast, right?
Okay.
But more specifically, I'm more excited about what happens on chain, right? And so I do think we're going to go past 100 to 150 million people that are truly on chain doing stuff. Whether this is RWA stuff, stablecoin stuff, doesn't really matter. Right? And that to me is where we reach the escape velocity, where people will move more and more on chain. We're seeing versions of this now, like Hyperliquid, stuff like that going, really starting to sort of become a little bit of a real competitor towards actually centralized exchanges and centralized platforms. And I think we'll hit that breaking point in the next year or so, where actually we're going to do more stuff there. And of course, blockchain gaming, I think is going to hit its moment with GTA 6 if it's not delayed again. It's been delayed for 8 years.
Let's see what happens.
Yeah, let's see what
we'll
happens.
Check Polymarket right now.
Exactly.
Yeah. All right. Well, hey, that was great. Thanks for your time.
Thank you.
Good to
Thank
see
you.
Thank you, thank you, thank you. We love all of them, but best for last. Thank you, everybody. Last panel of the day that I'll be hosting. This is Kobe Gilbert from PackSwap. Kobe, great to see you as always. True pleasure.
Thank you for having me here.
If we could please quiet down just for a moment. Thank you, thank you. If you want to have a conversation, we love that. Move to the back of the room, thank you. All right. So, Kobe, we heard from you earlier about PackSwap. For those who missed it, or for those who are just tuning in, could you give us a little bit of a background about what PackSwap is, and where did it come from? Where did the idea originate? How did you come up with the idea for PackSwap?
Okay, we live in a decentralized world. I think everybody in this room would agree. And there are centralized gatekeepers that are controlling our decentralized world, namely sexes. And we took a look at that landscape and we thought it needed to be disrupted, as simple as that. And so we have built a decentralized gateway, being a swap platform that operates at the same cost base as a dumb retail customer on a sex.
You bring up a really great point, because the entire point of crypto, of Web3, is decentralization. It's trustlessness. And so much of the business revolves around trusted third parties at this point. So was that something that you all saw as a problem that you tried to fix?
Well, when there was no regulation, what we saw was a load of bad actors come into the space and effectively abuse retail customers. So now there's more and more regulation coming in, there's more trust being introduced, but that doesn't stop bad actors being in this space. But when you're dealing on a DEX and you're dealing on chain, you can see where your funds are. You're effectively peer-to-peer with whoever the counterparty is at that moment in time. So it's totally trustless. And isn't that the main point of our space?
Yeah, completely. If we wanted just to do centralized third parties, we could just do it with the banks.
Or just stick with HSBC.
Right. So there's a lot of cross-chain solutions out there. There's a lot of bridges. There's a lot of DEXs. You mentioned that you're able to do it cheaper. How did you solve for that? How did you get to that point? How are you able to do it cheaper?
Okay, no disrespect to the guys that are currently doing this, but what they're currently doing is effectively building a blockchain in between other blockchains. And that's a cookie cutter approach, and that's all anybody's been doing for, the past 8 years plus. And it's to have validator sets that sit in between the swaps, and then to lock up considerable amounts of capital as collateral, and there's a cost attached to having that collateral and those validator sets there. And to be able to disrupt that landscape, you have to come with a new architecture, with a new approach. So we spent 8 years building a new architecture from scratch, whereby we don't have all of those validator sets, and we don't lock up huge amounts of money for long periods of time, both of which cost a lot. So I'm not putting down JD Thor, who is a wonderful guy, and he was ahead of his time originally. But they have $400 million locked up at any one point in time, and they have 120 validators.
It's not very efficient.
The result of it is, if you take native Bitcoin and turn it into native Ethereum on their platform, the average cost of that is 2.6%. Binance will go and do that for you at 30 bips. People naturally go to Binance to do it.
What sort of trade-offs were involved in building your solution? You said without the validator set of the traditional architecture, what sort of trade-offs did you have to make to arrive where you're at now?
$34 million.
That's a lot.
I had my eye on a fantastic house in Ibiza. I've got to be honest. Try that for a trade-off.
Yeah, no kidding. So where are you at today? What's the status of PackSwap? Can people use it? How much can they move around? What's it looking like?
Okay, fine. So where we're at, we have a live product in the market. You can go to PactSwap, PactSwap.io. You can swap today. There are limits in place. And we have our first major merchant going live next week. So the product works. We raise the money to build it and then ship it before we go for a TGE. So this isn't just a promise of something working.
I love that. Hello, hello. There we go. Battery issue. So it's live today. What are the limits? What limits does the platform currently have? What limits does the platform currently have as far as liquidity, and what does the path look like to raising those limits, and what assets are currently available to be swapped?
So today we have limits between $2,000 to $20,000 per swap. We manage native Bitcoin, native Ethereum, USDT on TRX, ERC, BNB, BNB itself, Rack Bitcoin, Polygon, and soon we'll be adding Solana, Tom, Base, Arbitrum.
I think that one of the reasons that so many people have had to stick with the centralized exchanges is that, for smaller amounts, it's simply not feasible to do a swap in a decentralized manner. We've all seen the gas wars. We've seen the situations where it can cost $50 or $100 to do a swap for, $1,000 of tokens. Are you all enabling people to do small amounts? And what does a fee look like? If somebody wanted to swap $1,000 of Ethereum for $1,000 of Bitcoin, how much would that cost?
30 basis points.
That's incredible. So it scales with the size of the swap.
It absolutely scales. We're still on chain. We are subject to gas fees, but we're not taking all of the cost of the validators and the locked up capital, which invariably is being passed down to the retail parties that are swapping. So we're chopping out all of that overhead.
I love it. So what comes next? I know you've mentioned that you're going to be integrating with different aggregators. What does that look like? How do you get the traction there? And with the fees, you're obviously going to be immediately competitive. How do you continue that momentum?
Okay, so in the first instance, we're moving between $5 to $6 million onto the platform a day. We've already signed those deals with merchants and gateways, so that's an integration job. That's there. Past that point, we're in touch with Trust Wallet, 1inch, Kyber Swap, and these guys work on a least cost routing model. So it goes in a routing table. Whoever's cheapest and has the liquidity,
they win.
They win the trades. Yeah. And that looks like $50 to $60 million a day.
What's the revenue for the company look like on that, and how does that play into the token at all, or what's that look like?
So 10 basis points from every swap of the underlying collateral from the underlying protocol CWeb gets locked up in a fee pool. The only way to access the fee pool is to burn the swap token. So as the market cap of the fee pool approaches the market cap of the project, traders will identify an arbitrage play to burn the swap token to acquire the tokens in the fee pool.
Very cool. That's a really unique way of having the mechanics work. What's the one thing you'd leave us with, Toby? Is there anything that people can do to get involved? What's next? TGE?
So around TGE, we'll be opening up for retail market makers. So retail can come and post collateral and earn on every trade. And yes, we have TGE coming at a very, very low FDV, currently at $25 million. And our closest competitors at $200 million.
That's a great comp. Toby Gilbert, everybody, thank you so much.
Thank you very much.
We are, ladies and gentlemen, and the show must go on. The show must go on. And now we have an incredible conversation between two very powerful individuals that will be discussing everything in the modern age of investing, and namely the frenzy, fortune, and fame of DAX. So I'd like to invite Mr. Christopher Maglino to the stage, Miss Anne Chien from IVC. Hello. Ladies and gentlemen, without further ado, and here they come to the stage. Round of applause.
Thank you, Chandani. You guys having fun? Yeah? Okay, great. All right. All you people that always come looking for capital for your projects, you're going to want to listen to this conversation. So, Anne, thank you for coming to see us today. Up. Let's see.
Yeah.
Nope.
Hello.
There we go. So thank you for coming to see us today.
Thank you for having me.
I think maybe this one goes.
Let's
see. Maybe that's better. Let's see.
Okay. Yeah, I think this
That's
one
better.
is better. Okay. Yeah.
I'll just talk louder.
Okay.
So, you guys have. Maybe what we start with is a little introduction, so everybody can understand what you guys are doing,
Yeah.
and that'd be fantastic.
Okay, so we are one of the largest VC from Japan, and we invested Web3 VC. We invested about like 4 years ago into like Web3. We also have a Web2 fund called Highland Capital. We pretty much received the mandate from the Japan government for the investment in a lot of LP corporates, LP from Japan. And through the past like 4 years, we've been investing into almost like 200 projects, into like Web3 projects. And every year we run the largest startup community conference in Japan, covering both Web2 and also Web3. Every year in Kyoto, called IBS conference. If some of you been to like or exploring like Japan markets, you probably heard about the conference. Every year their traffic is about like 10,000 to 13,000 people.
Oh wow!
Yeah. It's you can ask Dan. It's like he's been to all the IBS in the past. So yeah, we have community about like 10,000 to 13,000 people, covering both like Web2 and also Web3. And we are one of the early investor into Aether. Also one of the first like investor into the first Japanese regulated stablecoin, JPYC. Yeah, and recently we also did like 2 DAT deal, which is Naka and also BNC.
All right, so lots of transactions, and I mean, you guys have been involved in many deals.
Yeah.
What's the process that companies go through when you guys are evaluating them to invest into their transaction?
Yeah, I think first it's if like the business model is actually there's a product market fit, definitely, like because even for Web3, it's talking about like narratives, like fitting for hopefully greening communities, like hopefully after your token is listed, that bringing like some of the trading volume, but the underlying like for the token or the project still need to sustain like throughout a few cycles. So we feel like the cash flow is definitely one of the key for a project to sustain. So like firstly, like we will be looking to the business model, whether there's a product market fit that brings in like the revenue that will be sustainable enough for the project to lasting like a few cycles. Like once it's listed, like we need to ensure that as an investor we are still being locked up for like probably like another 2 years. So we needed to making sure that the cash flow is actually will actually help the project to actually live the next like 2 to 3 years before we are actually completely like exiting the project. So like the product market fits, whether the project is actually generating enough like cash flow, it's usually a key things when we evaluate like a project.
So now we make this transition into DATs, that are happening, right? So our conversation today is focused around the digital asset treasuries. I like to say that it's the digital asset treasury is like the Trojan horse that the Web3 people are putting in place for the traditional finance to get them involved in crypto, and then we're ultimately going to figure out how to take over that part of the business. Whereas right now, traditional finance thinks they're taking over crypto. I don't think that's going to happen. So
Yeah. No, I think that this is a way offering for like the Web2 investor getting exposure to crypto, especially from the institution side, because like not every single firm, like even though you probably still have like Fidelity, like BlackRock, you sometimes still see that like they are exposed to like the Bitcoin or like Ethereum ETF, but they are still like, because since some of them are actually publicly listed company, so they are still under certain kind of like restrictions, like regulatory like framework, or even within their board or like internal compliance to get exposure to crypto. So definitely like a DAT, it's a way for these like institutions or even for retails that probably have a hard time like KYC, like through a certain exchange, probably you like a certain tokens, but probably some of these tokens are just exposed to a certain exchange that these like retail investors have a hard time KYC into. So for them, like opening up like a stock market or like a stock trading account is probably some kind of a tool set that they're actually more familiar with instead of like trading directly with crypto. And while in some of the regions such as like Japan market, I think one of the reasons why MetaPlanet is quite successful is because Japan's like crypto capital gain tax is 55%, versus like the stock capital gain tax is only like 22%.
yeah, for Japan, it's perfect.
Yeah. So like Japan market is kind of making sense like to probably construct some kind of DAT, because the capital gain tax from crypto is just naturally way higher than like trading stocks. So this is why that people will be buying to like MetaPlanet or some of the like the DAT in Japan market, because in a way that you still have exposure to those tokens, but you pay less tax on the capital gain.
And you guys have been focused on, like, have you seen the difference between the DATs in Japan versus the DATs in America?
Oh yeah, definitely. Yeah, because Japan tend to be a very conservative market, so they pretty much only trade on like big caps, like those like top tokens that they've been like familiar for quite some time. Because Japan is a market that like usually project when they enter, it takes really long time to build that kind of trust. So usually for them, for any of the project entering into Japan, they will probably still like working on like with the local partnerships, and also getting some endorsement and some like validation with the local either like banks or like some of the local partners that like the traditional like Japanese investors are familiar with, because crypto market even in Japan is super regulated. Like all the exchanges need to get licensing from the FSA, which is like a US SEC, and all the token listed on the exchange need further approval from the like the Japan FSA. So in a way that it is the most protecting like investor market, but at the same time it is very conservative at the same time. So during the FTX incident, Japan is probably the least hurted market in the world, because they will put the asset in the cold wallet, so the exchange wouldn't be touching on the assets that like the retails or the general like customers from these exchanges, their asset is actually being well protected. Yeah.
And okay, so in Japan, in the U.S., we've seen this catalyst of DATs happen. So in Japan, do you think that follows, or is it just going to be the big tokens that are getting the attention because of that nature of the conservative environment?
I think first it's probably the big tokens, because a lot of projects are trying to get into Japan market, because Japan, it is the Nikkei market, like behind like Nasdaq, and it is still one of the major like financial hub in the world. So Nikkei market, it is still with a high volume like trading volumes, and even Japanese yen itself is, in terms of the forex market, it's one of the highest, like probably yeah, for the forex market is one of the like biggest ones. So it is like in a way that it is a market. Once you're breaking, it has a huge potential. But for that breakthrough, it just takes sometimes to build that trust and complying to the regulations in that market. Because after all, this is still a market with 100 million people.
And are you seeing an abundance of new offerings happening in Japan?
I think there are actually, well, I think the upcoming, like in the pipeline, there are actually quite a few folks trying to do Ethereum like DAT and also Solana DAT in Japan. But as I said, like this is still a market that's still like it takes some time to build that kind of trust. So either you work with like local partners in probably local corporates that have like a long-standing trust from like the Japan markets that probably help you to validate, so that the general public will actually think that, oh, this is a real deal, instead of like a token that they're not familiar with.
What do you think that when you guys are looking to invest into the DATs, are you looking at this as a roadmap for your early investments into some of your tokens that you already have? Or is it something that you're viewing as a completely separate element?
I think that it really depends on like the linkage, and also if this DAT would actually still having revenue generation ability. Because I think at the end of the day, you started seeing some of the DAT people in the Web2, they are probably more used to the traditional valuation about valuing the stocks with like PE, PB, like EV over EBITDA, or like NAVs. All these valuation are the traditional like stock traders more familiar with. So like throughout the hype of like the DAT that people only look into the NAV, I think when the markets start calming down and also start to use the more traditional valuation to value, especially if you need the Wall Street, like because I used to work for investment banks for many years. So the investment banks, like for the sell side, when they put out the reports, they will still use the traditional like Wall Street style to actually put out the valuations and putting out the reports. So in a way that you need to be convincing these like Wall Street people to actually helping you to come up with the report. That means like you probably still need to have some kind of like the real business inside. So I think that the reason that why we did like Nakai and also BNC and also consider about doing the Aether, it's because all these actually like the DAT we're thinking about doing, it's like they still have the real business behind, such as like the Naka, they run the BTC conference every year, and I think this year their net earning is about like 25 million. So they will be consolidating the real business into this like stock companies that will be providing a more like a traditional way of methodology of valuations for these like Wall Street to really come in. Because all the DAT or Web3 tokens, they try to get the Wall Street money, but then the Wall Street money use a different kind of like valuation than the token way, like a Web3 way of like evaluating the tokens. So I think that in order for the Wall Street names or like Web2 investor to get familiar or like getting the trust into like investing into these like the DAT companies, you still need to make in a way that they feel like comfortable of investing using the valuation that they were used to be evaluating a stock.
So do you think that the reason that some, it's a mixed bag, right? Some work really well, and they just keep increasing the NAV based on the amount that they're raising off of the S3s that they're filing and whatever secondary offerings they're doing, and it keeps trading above the NAV. Others have gone down below the NAV, but what a lot of people don't think about is maybe the initial investment in that DAT was at a 0.7 something. So from the initial investors that invested in the DAT, that is actually not negative. It's trading negative to 1, but it's positive to the people that put the money in initially, potentially. So what do you think is the difference between aside from this element, right, that it has to be valued and it has to be some kind of real business. Like everybody came out and there's like 50 Solana DATs now, right? Like what's the difference between one versus another? There's just this really bad public company that wasn't going to survive no matter what. So they throw a bunch of Solana in it. No matter what the yield is off the Solana, it's going to be better than losing, $10 million a year and doing another secondary financing to get out of the convertible debt deal they did before. So what is it that helps get the attention to the DAT so it starts trading? Like what do you guys look for in making your decision about these things besides just the regular fundamentals of the business? Because fundamentals are important, but it also has to be something that has an appeal to an audience that is going to get their attention anyway, right? Do you guys look at that piece of it?
I think, of course, if we don't look at the fundamental, like the core business of the original business, it's like how does the management company differentiate itself than the rest of such as if there are 50 Solana DAT, how does one differentiate than the others? One is they probably compare on the fundamental. If not comparing on the fundamental, then everyone is comparing on the price that you enter into Solana, or if that will be what will be the extra yields that could be from this the Solana DAT. The extra yield, you could be doing either on-chain stakings or you're doing yield stakings. What could be the potential yield? Because if they're actually 49 Solana DAT all pushing toward the markets, how are you going to get the attention from, it's not just about to us, but in the general public who actually have eligibility to trade stocks? How are you making yourself stand out? It is the same as you have 10 traditional financial companies such as you have Goldman Sachs, you have Citibanks, you have JP Morgans. How does one decide to invest over one over the other? It is depending, of course, on the financial reports. That is a methodology that people when evaluating a stock, or you evaluate on the book value, which is because I think that if you need those traditional people to buy stocks, or traditional institution people, they are not going to use the Web3 way when evaluating buying a stock. They are going to use the way that they were familiar with, which is the old way, what's putting out on the Bloomberg terminals, or that's a report that's issued by Goldman Sachs or Morgan Stanley, the valuation methods that's been putting out in Wall Street for years. To evaluate whether a stock is worthy to buy. So for us, it's about when you're constructing the DAT, either you could be still using the funds to probably do some of the M&A into some of the affiliated companies that yields the earnings and also revenues to boost up either your NAV, or your book value, your earnings, or EBITDA numbers. So in a way that those Wall Street and also the retails.
So very traditional kind of very traditional kind of analysis of the public company. You think that will, so long as they can prove that they're doing a good job in executing on yield, so that the net income of the business will dictate the price, not the MNAV of the transaction? Or do you think it's correlated as well, the net asset value of the business will hit some kind of level, but then the yield part of it and getting some kind of return there is going to equate for the difference between the losers and the winners?
Yeah.
Is that what you're saying?
I think when DAT are set with the NAV valuation is because the first few DAT were actually Bitcoins. And Bitcoins, of course, there is no extra yields or earning that could be coming out from Bitcoin. So it's pricing as a way that it's a digital gold So they use it, the book value, to evaluate on the company. But as you move on to other like DAT, whether it's like Ethereum, Solana, or any other token, which comes as a utility tokens, that it's not seen as a Bitcoin. So I think that if you are selling the DAT or the stocks, that you are planning to sell it to those like the normal people that we are seeing every day. I think that of course that they are every day in the past, like in their lifetime, they evaluate stocks with the old methodology. They won't be like changing their overnight like methodology for investing, just like the crypto affiliated projects, within a new methodology for like the valuation. So I think that when you're selling like the token projects to traditional market, I think that it's a way that to use their method when they're actually evaluating a stock, because they are going to buy a stocks, it's like for long term, and usually for the retails, they are not really like crypto people, actually overnight traders. They probably tend to be holding the stocks a little bit longer, especially the asset management house in Wall Street. Yeah, they probably the shortest period they will be holding is like half a year up to a year. So during this period, they probably, when only evaluating on the NAV side, like because it's 100% like correlation to the token price, that the token usually sees much higher volatility than the stocks, or when the company that really comes with a real business. So I think that the Wall Street will be more cautious when entering into the DAT deals, because of the volatility of the tokens itself.
Do you think there's a certain size of a token that the the project needs to be in order to enter the DAT market? Or do you think that this could, similar to the way that you have stocks that are on these exchanges that fit the profile that you're talking about, that are being based on their fundamental analysis, but there's also, companies with billion-dollar market caps that have no fundamental, that have literally only the prospect of being profitable someday, are still trading at $1 billion market cap. So do you think there's a level of company that kind of breaks that barrier, right? Like you can take a more early stage crypto that has potential, that with the right story, like look at with the OG transaction, like from 2 days ago, right? Goes public, the stock goes to $90 pre-market from $25. God knows how much they sold off the ATM when it went to $95. Probably a lot, I hope, for them. They sold a lot. But then it crashes right back down. But what people don't recognize is that now they have a lot more cash in the bank, that they sold at $95 than they did when they did the deal at $25. But the attention that the project got from doing that also drove the token, to do really well. So they utilize the public market to leverage the story. The token does well. The DAT does marginally okay. I guess we'll find out once we understand how much they raised off of the ATM at $95, right? So is there when you guys are looking at your projects to go into these things, is there a value that you put on the marketing side of this for a project? Or do you think it just always is going to come back to the fundamental piece, like the fundamental transaction?
Yeah, I think it depends on if we're doing the token side or the DAT. If it's like doing the DAT side, then I think a certain kind of like fundamentals still need to be there, because this is at the same time we are seeing in Naka as well. Like token actually went from like $1 all the way to $30, and now it's dropping back all the way to like $1.4, and it is the second largest like DAT for like Bitcoins. So I think that even
And
with
why do you think that is? Why do you, what's the issue with that particular one?
Yeah.
Like, why do other ones haven't done that?
Yeah.
What do you think the issue is that is the difference between that one and the other ones?
You mean Naka versus like the rest
Yeah.
projects? I think the problem with Naka, it's also like because it raised like $800 million. It's probably one of the largest like size that's being raised. Versus its market share is only like I think a few hundred millions. So like the markets that actually the total amount that they raise is actually bigger than their market cap already. So when there's the unlock happen, when there's a selling pressure, and also I think Trump Media Group also like came in with $200 million. So when the unlock happened immediately with that selling pressure coming in, that it will just be hard for the share price to hold up. Yeah.
So just too much supply.
Yeah,
in the
there's
market.
too much like supply selling pressure in the market.
But fundamentally, that business, under your fundamental analysis, has, if it's trading that far below the net asset value, is actually a good buy at that level.
I think now it's a good buy if anyone is looking for like a good target. I think it's when actually any funds or we could be also thinking about it. It's probably doing another secondary like OTC after the initial like probably the DAT is being constructed. It's probably wait until the secondary markets or like the second like OTC being offered when actually the market calm down a little bit and when the selling pressure like it's actually being eased. Because stock market is also highly correlated to the token market, and the token market these days you could already see is actually not that stable at this point. Yeah.
Interesting. So, how many of your early stage investments, because you guys have a lot, you guys have lots of companies. If you go to your website, you guys are invested in every single amazing deal out there. How many of those companies are talking about this strategy? Is it 10% of them? Is it 80% of them?
You mean for a DAT?
Yeah.
I think they were a bunch, but probably still like I would say like that less than the 10%.
30%?
Yeah, probably still. Yeah, I wouldn't like come up with a number, but just like a dozen of them are talking about it.
And as a VC in these projects, if you guys are you're taking calculated risks all the time in investing into these early stage projects. So it's not like you're prone to risk. You're investing, you're doing your best analysis, but you know that some of these are not going to work, right? Can you take that same approach with the DATs and say, okay, some of these are going to work and some of them aren't going to work, but the ones that do work will be will outpace so much the ones that don't, like that you continue to do it. Like, can you take that venture capital approach to the DAT market?
Yeah, we try to, yeah. Yeah, but at the end of the day, we still need to, because we are managing other people's like money, and partially our Web2 fund is managing the government's money. So we will be like a little bit cautious about like when evaluating. We try to make it, of course, we would take that risk, but at the same time, we will be wanted to avoid as much risk as we can. Yeah, so we will be taking all kind of diameters of risk into considerations when we invest.
And when you're making the decision to invest in these things early stage, like what percentage of the ones that you invest in early stage are making it to, making it? But I guess the ones that would go into the DAT, they've already kind of made it, right? So if they've gotten to a point where they can do a DAT, they've made it somewhere so your initial risk capital is already taken care of, right? So I guess at that point it becomes, is it better to go down the DAT route and double down on your risk, or do you just keep going with the risk that you already have because that's gotten you to the level where they could do the DAT?
I think that since we manage the corporate and also the government money, like we will be compared to a lot of VC, we are kind of like risk averse. Yeah, given the nature of our LP, that we are still like considered to be the work, but our ticket size can be big. Yeah, or we could be pulling like asking our LP, including like SBI investments, to co-invest. But the thing is like we needed to making sure that the trust is always there, maintaining with our Japanese LP, because Japan market, trust is everything. Yeah.
What do you think happens next on DATs? Where do we go in the next, short period of time, and then over the maybe the next year?
I think this year's, of course, like for the Wall Street that haven't had the exposure to like the token yet, or they have a hard time opening like a token, like a crypto accounts. They could still like invest through the DAT. I think this is a great vehicle for the Web2 investors who have a problem like opening accounts in the crypto worlds. Due to a lot of like compliance, regulatory issues, especially for a lot of like banks and financial institutions. So I think that this is a great vehicle for them to getting exposure to the crypto and the token. But as for the existing like the Web3 investors, it is just because we also have already exposure to tokens. So when we are actually evaluating on the DAT projects, we can help like probably convincing some of the Web2 investors who are interested to probably participate in the token but who cannot into like the DAT. So it could be like a win-win from both of our ends. It's like from our Web2 partners and also like us like being the Web3 itself.
Glenn, thank you very much. I appreciate you sharing with us. I know that there's a bunch of people that are always trying to hit you up to get your attention, to try to raise money from your company. And so I appreciate you taking the time to come here and be here with us today and share your insight onto DATs. We're excited about them. We think it's a unique vehicle that'll stay for a while and provide some liquidity for our partners, some of your investments. So thank you very much. I appreciate it.
Thank you very much for having me.
Thank you.
Thank you.
Okay. I don't want to lose your attention now. Please come gather. We have a continuation of this very intriguing conversation all around DATs, where it's the meeting of institutional capital and decentralized capital. So I'd like to invite you to come and sit in the front as we get ready for our esteemed panelists that are about to join us on stage. Mr. Mark Ryden from Ether, co-founder of Ether. If you're here, please come to the front of the stage. Thank you. There you are. And I will have Mark introduce his guests. Please come to the front and take a seat. David Gan, Yana Wu Siu, SJO, and Mr. Mike Ho. Please take a seat.
All right.
There's three mics, so pass them around.
I know it's a weird spelling. Just pronounce it as Yanu. So it's like a canoe with a Y. Yanu.
I think I messed
All right. What's up, man? Sorry. How's it going? Good to see you. Please have a seat. I think we got it. Yeah. All right. Do we have David? Is David? David Gann, Inception Capital.
Announcing you, and then you can announce them. But I want to hype up Michael. Try to hype up Michael, extra from American Bitcoin. What was your Mark? Your Mark, right?
Mark. Yeah, that's me, Mark. Right. You want to move one down?
Yeah.
I think Laney's not here, so it'll be the four of us.
Is Wes here? Wes? Did Wes come? No.
Different Wes.
All right, guys. Everybody, perk your ears up. We have Mark Ryden from Ether will be moderating this. We got some great guests here, including Mike Ho from American Bitcoin, Eric Trump's thing. They're one of the hottest things on the market right now. We got SJO, head of digital assets from Hyper Corporation, and Yeon Woo Seo from BD lead at CLS Global. So DATs are all the rage right now, and we got some of the biggest ones in the world here. So let's give them your attention, guys. Here you go, Mark.
All right, thank you. Cool. Well, I feel privileged to be up here chatting with you gentlemen. It is the acronym of the moment, I think, DATs, right? For those in the audience that maybe don't fully know what they are, I think you guys are probably the best people to be asking. So if you could, maybe in your own words, give us a little bit of a rundown on what is a digital asset treasury company?
We're a little different than just a digital asset treasury company. At American Bitcoin, we like to think of ourselves as not just a treasury, but we are an accumulator, and we do that through multiple strategies. At the core of our business, we have a DNA that's built in Bitcoin mining. We see Bitcoin mining really as a means of being able to accumulate Bitcoin at a discount to spot. As of lately, our cost to mine a Bitcoin is about half of where spot trades at. All-in cost is less than $60,000. Cost of energy is less than $40,000. That is just one layer of our strategy in how we accumulate Bitcoin. In addition to mining, we have all the means of being a U.S. capital market, U.S. publicly listed company, and being able to monetize volatility, monetize liquidity, and looking at ways to creatively add Bitcoin to the balance sheet, offering pure beta exposure to our shareholders.
So if I was looking to acquire Bitcoin, if I believed in it, it's financially better off for me to go through a DAT like yours.
Well, when you invest in a DAT, the difference between a DAT and when you buy a spot Bitcoin or an ETF is when you buy an ETF spot, your ratio of ownership will always only ever be 1. Less the ETF fees, so 1 or less. When you buy a DAT company, you're betting on the management company and the active management. DATs at times will trade at a premium, at times they'll trade at a discount, but you're really betting on the management of the company to increase your underlying token per share.
Great explanation. I want an even simpler explanation from you guys. How do we really dumb it down for all the rest of us out here?
Yeah, so I actually think it's similar to what Mike said. It's an actively managed strategy, but more importantly for countries like Korea, where you don't really have the institutions having access to pretty much a direct way to acquire crypto. Unfortunately, a lot of the accounting firms still will not take you on as a client if you have crypto on your assets. There are talks of opening up ETFs, and there are talks of opening up the accounts for local institutions. But until that happens, there really is no proxy for any institution to have exposure for Bitcoin. In the US, a little different. I understand there's 160 different DATs. You have a bunch of listed miners. And of course, you have the OG strategy as well. In Korea, I think it's carte blanche, and whoever can get involved and have a first mover advantage, they will do very well. More importantly, for foreign investors, I think there's a lot of eyeballs on Korea because it's the second biggest crypto market in terms of fiat market share. But there is no real, the arbitrage is very similar to what you saw in Metaplan in Japan. If you are an investor buying crypto directly, you will be subject to about 50% cap gains taxes, whereas if you buy a vehicle online, it's 20%. So it's a 30% arb from the get-go. Korea, it's the same story. For foreigners, provided that you are not the majority shareholder, you will only be subject to 35 bps stamp duty, and not the 20%, which will be effective 2027.
So the DAT space in Korea is emerging. It's up and coming now. This is kind of a space that is ripe for opportunity. Should legislation open the door? Is that kind of what you're suggesting?
Well, that's what we all hope. But I think it's a little bit of a unique market, I would say, because there is still the skeletons from the Asian financial crisis where the country almost went bankrupt. So I don't think there will ever be a scenario where the Korean government will prioritize the investment of the crypto ecosystem over the Korean won. So I think cross-border capital controls are here to stay. There will remain this blockage of free-flowing capital, which will typically always provide you an arbitrage opportunity. And if somebody can get it right, there's a lot of money to be made.
Yeah, I mean, with all the trading volume that we're seeing on crypto exchanges in Korea, I can't imagine that they wouldn't be very, very interested in access to digital assets through capital markets as well. Love to hear your take and maybe what you feel the digital asset treasury space is.
Yeah, I feel like I agree with definitely both what they said, but I guess more on the regulatory framework standpoint in Korea. I think everyone knows that it's a bit of a tricky gray area. However, I think if there are different strategies and different companies that are able to make the first move and become the biggest company to be able to provide those consults and correct strategies to penetrate the market, then these are the ones that we should be following as well. And as we said, like it's kind of just we should hope that the regulatory framework and the governance does push the crypto ecosystem as much as they can. But for now, it's really looking at what we can do with the given framework and who is the first mover.
Absolutely. Mike, you made a really great point earlier on that with DATs, you're very often making a bet on the management team, right? I guess through them, you're also making a bet on the strategy, right, and the yield that these treasury companies are generating. How do they generate yield? What's the structure in play there? Maybe you can give us a bit of an insight into how you guys do it.
I'm sure it's nuanced with many operators and different DATs, but at the core, speaking from a U.S. listing, being a U.S. listed company, main board listed company, you have two really vanilla strategies that DATs can run. One is being able to be shelf eligible. You have what's called an ATM and at the market offering. ATM, basically as it sounds, is the ability to issue new shares into the market. You're selling down new company shares into the market where the proceeds come to the company treasury. Which means that when you're trading at a high MNAV, when you're trading at a multiple to NAV, you're trading $1 of dilution of your company for 3, 4, 5, potentially even higher back in Bitcoin. Now, that is a very attractive trade. It is very accretive to all the existing shareholders. It's accretive for new shareholders, but the second layer to that is liquidity and trading volume. There's no easy button that you can hit where you can trade $1 billion of dilution for $6 billion back in Bitcoin. And it's really in liquidity building. It's in identifying different demographics and how you design instruments and products that I think will be the biggest challenge for a lot of DATs. Vanilla approach is you have ability to tap into programs like the ATM, ability to issue converts, low-cost converts that convert at a premium to the current share price, and that's monetizing the volatility. I think where you're going to start seeing is the nuance and creativity is going to be how you identify different demographics, different markets, and how you create exposure for those investors for the underlying token, and while driving value to your shareholders.
100%. SJ, with that in mind, rank these for me in importance. Is it the asset, Bitcoin, for example, or whatever the DAT is? Is it the management team, or is it how they structure yield? How would you kind of put those in order?
Well, I mean, if you don't believe the upside in Bitcoin, DATs are probably not a good investment for you. So I think that's just an underlying assumption. But in terms of I think that DAT's 1.0s, it was about who has the biggest coffers. And there's a very clear standout number one, which is strategy. But as Mike alluded to, like there's not too much value you can return to shareholders by simply buying and hold. And the yields, if you stake Bitcoin, are less than 1%. So you're going to have to get creative. Mike alluded to their advantages for mining, which obviously they have access to deep capital and have access to the biggest miners in the world that are based in the U.S. I actually co-founded a mine called Power. Acronym is Proof of Work Renewable Energy. So we're trying to proliferate the renewable energy generation, but we also have a hash rate trading platform. And if we can, the way I see it is if you purchase hash rate, it's almost like buying Bitcoin at a discount in installments. So we're not in a rush to purchase it. For us, it's just to accumulate as many as we can as cheaply as possible, which is the first part. But the second part, there's also many ways to skin this cat. You don't just have to stake Bitcoin. There are many Bitcoin denominated NAV funds as well that are running risk-free arbitrage strategies that are punching in 15, 20, 25%. You can also engage with the prime brokers that are used to giving you cash loans collateralized with Bitcoin. But what if you do a repo with those guys? There's so many different ways to do it, but maybe I could leave some more answers to Yun.
Yeah, I mean, that sophistication of management of the digital asset in and around that capital market space is one of the key, expertise elements that you guys are really unlocking. I think that's kind of a very, very interesting skill set that I think is developing very, very quickly. But I'd love to hear your take on this as well.
Yeah, I guess as a market maker in the crypto space, it's really about being able to advise projects similarly to how DATs are strategizing different yield-making strategies, to be able to navigate through the given framework and the movement of liquidity within the market. So as Mike mentioned, like accumulating and bringing value to the shareholders is something that we always are looking to capture, and also
supply because of treasury companies, because of ETFs, where the Bitcoin supply is only compressed.
I'll just add that I think price action on Bitcoin looks like a short squeeze in very slow motion. There are about 360 DATs that the last time I checked, albeit not all of them are pure Bitcoin plays. But all of these guys are looking to buy the dip, because if you look at every single announcement by the DATs, one of the main points of focus is what was the average cost that cost you to purchase these Bitcoin. So these dips that have like 60, 80% drawdowns hopefully will be a thing of the past. The upside, I think, will come from the pensions and the sovereign wealth funds. And these guys are, in some cases, managing hundreds of trillions of dollars. And I don't think these guys will risk having reputational risk by investing in something that there is no federal definition of. It's almost like the cannabis industry, where you have certain states are completely kosher, but still nobody knows what the definition of Bitcoin or crypto is, for that matter. And once the federal definition is set in place, I think that's when these big conservative money managers will come into play, and that's when you will see the short squeeze really move in action.
I guess to add to that, the importance here is also the adoption between Web 2 institutions, large institutions using crypto as well. And it's less about making the quick money. I feel like the cycle is changing now, where crypto is really being used everywhere in every kind of payment, any kind of the blockchain system being used in all technologies as well. So it's less about making quick money and more about strategizing to generate yield and not keeping some of your assets idle, and having a safer yield generating system.
Awesome. Well, gentlemen, we've got a fantastic audience here of investors and retail holders, and I'm sure many, many Bitcoiners as well. Any takeaways you'd like to share with the audience before we wrap up?
I think it's from a macro perspective. I think we're going into a massive bull run. It's just a matter of which quarter. I think it's mostly going to be driven by the Fed and the tone of Powell, unfortunately for now. But if not Q4, probably looking at a very bullish Q1, Q2.
Love to hear it.
Yeah, I'll just make a plug into my company. I just joined Hyper Corporation in September. I had just moved back from Singapore to Hong Kong, which was my home, in June. And it was such a compelling opportunity that I chose to pick up and move once again. My wife's not too happy about that, but we'll deal with that later. We are a DAT Kazakh listed. We are, and also the important thing is, as a majority shareholder, or even some of the other DATs in Korea, they are entirely driven by overseas capital. Unfortunately, that does not look too good in front of the regulators. I think we differentiate in the sense that the existing management will retain their position. They have experience of managing listed companies in Korea for nearly 10 years. And we have great sponsors who will continue to bring in the cash, hopefully, and hopefully I'll be able to do a good job and make this work.
I'm sure you will. And you know?
Yeah, I think, as Mike mentioned, everyone has been talking about, Q2 is going to be the bull run, Q3 is going to be the bull run, Q4 is going to be the bull run. And I think nowadays it's less about predicting when it's going to happen and being prepared for the upside and accumulating when the bull run is to come. And yeah, let's look forward to that.
All right, well, thank you very much for joining us and getting involved and talking about the DATs. And yeah, I'm sure if you have any questions, feel free to come and ask these other gentlemen. Thank you. Thank you. Nice one. Great job. Good job stepping in.
Okay, without further ado, we are moving on. We're falling a little bit behind, so I'd like to invite our next panelists, our RWA panel from yield to liquidity. A very interesting conversation right now. RWAs have been hot topic for the last few years. And they continue to evolve and expand. Tokyo, please come to the stage. And I invite all your panelists to come. I'd love for you to introduce your esteemed guests and have them introduce themselves. And we'll get this. We need one more seat. Can you guys? Thanks, Tokyo. Sorry about that. Thank you very much. Fami, please come and take a seat. Alexander, are you here? And Raj, I did see you. Please have a seat. There you go. Thank you so much, gentlemen. Tokyo, take it away.
Thank you. Good afternoon, gentlemen. I'm Tokyo. I'll be sort of your moderator for today, but I'm not going to take too much time. I want to take all the time that we have to hear from all the brilliant minds from all over the world. So, without further ado, maybe you'll start with intro. Maybe Raj, you can get started.
Yeah, absolutely. So I'm the co-founder and CEO of Zebu. We've built one of the largest institutional payments networks, actively serving over 140 telecom clients around the world, have processed over $10 billion in transactions, and further working on retail products for end telco subscribers.
Hello, I'm Noah. I'm the founder of Upside. We are an operating system for on-chain capital markets, which includes RWA tokenization and trading. Notably, we're partnered with Republic in launching the mirror tokens that they're doing for SpaceX and Anthropic, and also with BitGo and bringing a lot of new assets. And I'm excited about the conversation we're about to have.
Hello, everyone. Can you hear me? Is that working? Nope. Hello. Hello, can you hear me now? Yes. Oh, that's better. Okay. Hi, everyone. I'm Farmside, president of the Midnight Foundation. Midnight is bringing privacy-enabling solutions to blockchains. We believe that is a requirement to bring institutional liquidity, corporate investment into blockchain, real-world use cases. We're in the middle of our token distribution and heading to mainnet by the end of the year. So, thank you.
Thank you very much. My name is Alexander. I'm the founder of VNX. VNX is a European stablecoin generator. We have VNX Euro, VNX Swiss franc, VNX British pound, and we're also tokenizing gold. So it's VNX Gold.
Awesome. Thank you very much. Maybe this one is louder, so I'll pass this around. Or unless maybe DNA team, if you have another mic. But for this one, for now, we'll just pass this around. So we have a lot of projects from many different verticals, but I think it is safe to say we can all put it into a single umbrella of tokenization of assets, tokenization of real world assets. So I want to take a more of a wider approach and kind of narrow down into specific questions a little bit later on. So today's topic is all about, we've heard all about tokenization as a concept. We see in white papers, we see in news articles, but what are we actually seeing and what are we actually doing about it actually in practice? So we'd love to hear from all of you about maybe what makes tokenized assets greater than our traditional financial rails, financial assets that we have. Maybe we can get started with you and maybe share a little bit about your experience.
Yeah, so along with Zebu, I'm also the co-founder of a venture called Blockridge, primarily focused on tokenizing equities, bonds, and financial products that either provide yield or alpha, right? So, and then at Zebu, we are also, in a way, tokenization focused because we provide stablecoin settlements all over the world, which is really just the digital dollar, the dollar being made programmable, hyper available to multiple people around the world that didn't have access to it prior. And it's absolutely been a game changer, right? If you think about tokenization, the evolution has happened, initially stablecoins, wherein Tether was created to make market making much easier, trading much easier, across exchanges. Eventually, stablecoins started being used for either store of value or value transfer, and now we are going into tokenization of equities and bonds, and we are effectively seeing the actual application of blockchain, right, within financial tools. So my overall thoughts on tokenization is that it's pretty much an easy way to take programming and language and automating a lot of the inefficiencies that we had within capital markets previously. And it's probably going to be the next internet layer that's going to handle the trade, transfer, and settlement of financial products.
I think my point of view is that it's very much from the decentralized side of things and from the blockchain native side of things. So what I'm most interested in seeing and what we can expect to see is a bringing of the on-chain primitives into traditional finance. So right now it's a big deal around getting to instantaneous clearing. So a lot of public market exchanges are moving towards instantaneous clearing. But what's actually happening on-chain is even more sophisticated than that. So we have the ability to do atomic transactions on-chain, which are a batching of a combination of things. And this is actually quite amazing because you can enable things such as like flash loans or instantaneous borrowing and repayments, a liquidation of collateral, arbitrage across multiple exchanges simultaneously with at a single instant. And this very low primitive change is actually going to revolutionize markets quite a bit. And the other thing around this is that you have deterministic state, which means that you know exactly what the state of who owns what is and when and why. And that's very important for AI trading. So I think what we're going to see on-chain is going to be a very differently shaped market than either DeFi or the public markets have been before. The liquidity is going to come largely from AI trading, I believe, and the packaging and the clearing of it is going to be very different. So I'm really looking to the blockchain native side of things to define things more than necessarily the public markets that are coming on chain realize that that's the case. So that's what is exciting for me.
That's interesting. Interesting, Fami, right? Because
that went down well.
we just spoke a few minutes ago about how Midnight is focused on privacy as well, right? How all these big funds don't want to give away the alpha. So we'd love to get your thoughts on it.
Yeah, so Midnight's about enabling privacy solutions within a blockchain. And we look at it in a few ways. So if you think about tokenization, so let's look at the three stations that come with tokenization. Democratization, now fractionalization, and collateralization. Now, democratization already exists in the equity world. Most people can go on Robinhood, eToro, and can buy most equities in the world. And they can do it relatively cheaply. So I don't think tokenization necessarily brings democratization, which everybody claims. Fractionalization is helpful because suddenly you can take very large, inaccessible assets and have a fraction of a token that can be owned. So that definitely helps. The real unlock is collateralization. I've used this example a few times. Elon Musk and wealthy people don't sell assets to buy a new asset. Elon Musk bought X not by selling Tesla, but by leveraging his Tesla shares. And what tokenization does in the right form, with the right tools and applications, is allow average people, ordinary people, as well as large corporates to collateralize the asset. But you want to do that in a way that your assets aren't on chain and visible to everybody. We all have been in offices in the past before remote working, and you talk about everything that you did at the weekend. You might talk about the office affairs, but nobody ever talks about their salaries. Nobody ever talks about what they own, what they hold, and what they get paid. And you're on a blockchain, everything we tokenize, stablecoins included, are public. And Midnight thinks there's a world where you can start paying people in stablecoins in a private, compliant manner. You can hold assets in a private, compliant manner and use them as collateral. I'm happy to talk to anybody out there building tokenization solutions about how Midnight can help in that progress.
Yeah, Alex as well. If you can share your thoughts on what are we seeing? Like how are institutions starting to adopt, I guess, tokenization? Love to get your thoughts on.
I think from what I see, or from what we see, can I speak like this?
Oh, yes.
Okay, perfect. I think there was a lot of discussions about institutions adopting blockchain technology. What I can speak about is the European market. Literally in a month, we will be becoming the first stable coins to be integrated by a traditional bank to allow deposits and withdrawals. And I think it's a landmark breakthrough for the European market. If you consider that in Europe there are, let's say, between 5,000 and 6,000 banks, only 10 are more or less active in the cryptosphere. Maybe 30, 40 are trying to experiment with it. But what we see is a very, very big shift in the perception. MiCA, which was coming into effect slowly over the last year, now really gives this clarity to the institutions to try to experiment. And we see that the adoption really is starting from, the first, like Signum, Bankfrick, the leaders in the European market trying to do the first things, and then it's starting to cascade. My feeling it will take 3 to 5 years, but the first pioneers are already starting to move.
Do you think institutions getting involved and having that concept trickle down is how a tokenization of assets really gets, I guess, adopted?
I mean, the biggest kind of test is that Vlad Tanev openly speaks about tokenizing securities, and of course, one side is to say, why do you want to do it? It doesn't really democratize it because it's available on the Robinhood. Right. But then we're forgetting that it's only available to, let's say, 1 billion people who are, in a kind of westernized society. The remaining 6.57 billion people lack that access.
Sure.
Of course, majority of them are now accessing the crypto for very, very basic things like saving their money from gangsters in the traditional world, from the gangsters in the uniforms, from inflation, or from expropriation. But once that need has been satisfied for those 6 to 7 billion people, then they would be looking for, enhancing, investing. Of course, the first thing would be yield generation in DeFi on the stable coins that they're already going to be using, be it dollar, euro, Swiss franc denominated. But the next step is bonds and securities. So I do see that the movements of the big banks like Robinhood, who are planning to tokenize it, are not necessarily targeted at 1 billion, golden 1 billion, but more about the spreading of the kind of access to the Western financial markets to the rest of the world.
I see. Thank you. Maybe you can pass the mic to maybe Noah. We can get started with Noah for this question. No specific order, no preferences. But so hearing all of you speak about what's happening in the world, it sounds all great, right? From a retail perspective, it sounds so shiny. And it's like the new age is coming. But we've been also been hearing about this for the last 2 years, 3 years, maybe even 4 or 5 years. It's hard to see what is actually going on and what is being solved or not being solved in the back end, right? So maybe can you tell me a little bit about the immediate hurdles that you are seeing that is being or that is what do you say that is going to be overcome, or that you're specifically maybe working on that will actually get us closer to where we want to be? Yes.
Maybe we all can use this one. Something. So the question is about what is the state of the market, I guess, and how.
So I guess what are the biggest challenges? I think you gotta.
It's great. You're doing good with that, Mike.
Yeah. What are the biggest challenges that the market or you specifically are trying to solve to actually make this into a reality?
Yeah. So I think you mentioned like the last 2 or 3 years, and I would say. The U.S. tends to lead a lot of things, and there were a lot of regulatory hurdles. The last SEC chairman was very against anything innovative in this space, was doing a lot of regulation through enforcement. So the new chairman has completely changed the frame in the country, and is working in the U.S. to make U.S. the crypto capital of the world. That makes a huge difference. A lot of things that we previously thought of as being, hey, we're just going to go do this, were not possible. And so the atmosphere is very different. So I think that has attracted a lot more institutional players now who are coming in. But it also means that all the projects that have been almost backlogs are now moving forward again. And I think we're seeing more and more of those projects come to market. Yeah.
Thank you. Maybe Fahmi can chime in as well.
Yeah, I think. Can you hear me? I'm really going to speak it.
Really close.
I'm going to kiss this microphone. What does tokenization do for the individual? I'm going to flip the question. What does it do for the corporates, the large institutions who have mutual funds, asset funds? It reduces their costs. To access money market funds, mutual funds, equity funds, bond funds, there's hundreds of thousands of people at institutions who support that transaction. Compliance people, transfer agents, settlement agents, many teams. What blockchain does, and it go back to the real core, is smart contract technology, which removes individuals, removes people. It brings truth to your transaction. So the value is to the corporates, not necessarily to the retail audience. Because when you tokenize an asset, you're paying multiple layers of fees. To access an equity on Robinhood, and there are other products other than Robinhood. I don't work for Robinhood. I don't use Robinhood, just to clear. But to access an equity through those channels, it is very cheap and very efficient. When you tokenize that same equity, you're paying for the custody fees of the equity, and then the SPV structure and the custody fees of the digital token. And the spreads of tokenized assets are wider than the spread of trading that equity directly. So the real innovation is moving away from equity registers to fully digital registers and having smart contracts who minimize the cost of transactions, which is not great for HR resources because AI and smart contract technology will remove those people, but that's the progress that you need to see in tokenization to really unlock it, to really see the benefit. And then access is direct through tokenization not layering of assets and costs.
Maybe Alex, you can share some thoughts on this as well.
I think I'm okay.
Yeah, okay. I guess it's all been said. Sorry. We got time for one more question? Yeah. We got time for one more? Actually, it looks like we are out of time. So maybe we could pass the mic around for give a little shout out about what you guys are doing and what you want the audience to know about your project and how you're looking to, revolutionize the world, and then we can wrap it up then.
Sure. So what we're doing is very basic. We're infrastructure for the blockchain technology. We're doing stablecoins. We're multi-currency stablecoin generator. And the goal is to provide non-US dollar stablecoins so people can transact in the currencies that they're used to.
So Midnight is a new L1. It could be a meta chain to other L1s or L2s. We think about how privacy and data is at the key of innovation and sharing. And ultimately, choice of how you disclose information should be at the discretion of the owner of that data or the owner of the asset. On blockchains today, everything you do, everything you own is visible to everyone. You will get doxed because it's immutable, it's there forever. So Midnight is enabling privacy solutions with smart contracts and disclosures that open up finance, not DeFi or TradFi, just finance, open up healthcare, AI, GovTech, things where data is at the core of the business solutions.
At Upside, our goal is to increase the amount of assets that are available on chain, high quality assets, and to increase the transaction volume of those assets. That includes, through AI trading vaults that we have and other trading tools we have. And we're working with partners to do that, which include custodians, L1s, L2s, existing funds, brokers. And so we're looking forward to fulfilling that mission.
So at a basic level, we enable distribution, settlement, and tokenization of various financial products, such as the dollar, obviously, and then additionally at Blockridge, also for securities, bonds, and private credit.
Awesome. There's so much more I want to ask, but thank you all so much for the time and for me to be able to pick your brain. Please give a round of applause for these beautiful 4 innovators. Thank you. Thank you. Thank you so much.
Okay, who's excited? What an amazing day we've had. It's too bad Brock Pierce is not here. He'd have a lot to say right now to get you guys inspired. We have our next panel with our esteemed guests from yield to liquidity, all about, oh wait, we're gonna do from yield to liquidity again. Again. No, actually, this is my favorite panel of the day. I think it's the most important topic. Not that the other ones weren't. I just think that regulation and governance, can I have your attention, please? Regulation and governance across the world is basically losing its knob, meaning that it's in a frenzy. It's in a dynamic efficacy, hopefully efficacy, of shift and change and transformation across the world. And we're so happy and so honored to be in Korea to discuss the regulatory and governance around finance and decentralized finance and everything that it entails with our esteemed guests. So please could I have Rock Zacharias come to the stage and please introduce your esteemed guests. Thank you. Round of applause for Rock.
Hey, better yet, let's give a big round of applause to Chandani. She's doing so much to make all this work, guys. Let's go. All right, so we have a special guest we're going to add to this panel from the last panel. His name has not been added, but if we could get Noah's name added to this panel at some point. But Noah, go ahead and jump up here. We have Josh Lawler, again, the Bid Angels kind of resident legal opinion. And we have Marquis from Outlaw. Marquis. And Suhee Han, also another lawyer. So we've got a couple lawyers. All right, let's get it started. And then can we get Chandani? Could we get Noah's name also added up on here? Is it Noah Thorpe? How do you spell it?
Thank you. Upside. Yeah, he was just on the last one, so we could just copy paste it.
All right, guys. So there's a lot going on in the world with regulation, governance, taxes. The world is changing fast. We went through a pretty tumultuous time not long ago. So at QuickSwap, we built this project that did, at peak 1.5 billion a day in volume, and it was kind of a crazy thing that me as a co-founder, I actually turned down any tokens. And it was partially to be decentralized and cool to the community, but it was also because I was scared. And I didn't want to get, nailed as some securities thing. We actually turned down a $20 million investment from Sequoia too, because we were scared that if we sold tokens, could that make us a security? So we went from that, where founders are scared to take, profit, to now everybody is doing everything. I guess this first question I'll ask to you, Josh. We have a lot of legal teams at our various portcos, and they're kind of telling us, I don't know if I should say this publicly, but they're basically, when we ask them questions that we used to ask, and they used to be be extra safe, be extra cautious. Now they're kind of telling us, you're probably okay. We're getting a lot more of those answers. How do you, first tell us who you are, Josh, and then, tell us, how are you looking at this? I know you're kind of a little more strict when I talk to you, though. Just for you. So, I'm Josh Lawler. I'm a partner at Zuber Lawler. I and our firm do a lot of work in distributed ledger technology, agentic artificial intelligence. We've probably represented 120 to 150 clients in the space over the last 7 or 8 years. And notably, I do a lot of work with Bid Angels and a lot of the portfolio companies. So there's that. To your question, here's the thing. The law hasn't changed, but what was going on previously in the last administration was asinine. So, the thing there is everybody was very gun shy. Everybody's, cat in a room full of rocking chairs, because you had pronouncements coming out of the SEC that just made no sense. They were flat out unconstitutional wrong. So at that point, you're like, okay, well, how do I counsel my client on this? Answer, be careful. Don't rip anybody off. Don't create damages. That type of conservatism. So, and in some cases, just don't do business almost. Yeah, and we did a lot of regulatory arbitrage. It's first we're in Switzerland, then we're in the Caribbean. It's obviously the United States was excluded from lots of stuff because of the landscape. Where we are now is a really interesting place. The law still doesn't fit the technology. We don't have new law, Genius Act aside, but there is a genuine interest in kind of making it work. So, the kind of first principles don't rip people off, don't engage in asymmetric information transactions can really guide you fairly well. And then we also, thankfully, seem to have lost the idiocy of saying it's a token, therefore it's a security, which was a dumb statement from the very beginning, but, really chilled everything. So now we seem to recognize that a token is software, and it is whatever it represents. And if what it represents is a classical security like a stock or bond, well, treat that like a security. If it's anything else, probably going to be treated as a commodity, because commodities are pretty much everything else. So yeah, you can do more. And I hope I'm saying it right. Suhee Han, how do you feel about this as a lawyer? Are you has your legal opinion to your clients, has it shifted a bit since the change in regime in the U.S.?
Actually,
And if you could speak
my
loudly
client is not really interested in the U.S. regime because they are working in Korea and they have offices in Korea. But actually, with the Trump administration, also in Korea, there's have been something changes. As you know, new administrative have been coming to Korea in May this year, and they announced that they will make some new law and they will make digital asset basic law until this year. So this kind of things are making some companies have really a bright future, and they are anticipating the new law will come into Korea. And the situation is really similar to U.S. right now.
Okay, thank you for that. So, Lawler, you mentioned previously it was kind of like by default everything is a security. So I was in Jackson Hole, I don't know, a few weeks ago for the Fed meeting in the Wyoming Blockchain Symposium, and I was talking to Paul Atkins about this actually, and interestingly, his opinion, I don't know, this was a private conversation, and we were drinking wine, so don't like use this against him. His opinions, I'm sure, were not that of the SEC, but just his own. But he basically was telling me he thinks most of this is not securities, and he was very strongly clear about that. One of the things we talked about, and this is something I'm really interested in, and I hope we can have some good dialogue about this here, but it was so with Genius. One of the things that was in Genius that I didn't love was that they said that the stablecoin issuers cannot give yield to consumers. And that is, to use your words, asinine. I think it's really messed up. I think it's on the level of just stealing from the regular people like inflation and like accredited investor laws. I think it's terrible. And I asked Paul and he said the same thing. He said he really didn't like it and we need to find some solutions. He said it was a good start, but that we need to find some solutions. And so towards the end of the night, after about an hour of talking about this, he said, Rock, how about this? What if we allowed stablecoins to go into ETF wrappers, and in these wrappers, we could then give people the yield? And I said, Paul, that's brilliant. Can we do this? And he said, I don't know. And again, we were drinking wine, and he was like, I think we might be able to. Let me talk to my team. And okay, and then next day I come back to him and we're talking more about this. I thought a lot about it. I was like, okay, that's really cool, but it doesn't solve the issue of getting these yields to people in DeFi and people in other countries that are not banked. Someone in Nigeria who wants to get a yield. But we need people to buy treasury bonds right now. And so if we need people to buy treasury bonds, I want the guy in Nigeria buying them without a KYC. And so I said, could we make a carve out maybe that we could have, if it's in DeFi and there's no custody, it's going into a smart contract, could we give people the yield? And he said, Rock, I don't know, that sounds more like an investment contract. But he said he'll keep thinking about it. So what do you guys think about this? How do we get these yields to the consumers? And then to add to that, long question, guys, but in clarity, the banks are fighting right now. The banks are fighting to not allow any workaround. So like Coinbase is doing a workaround where they're giving people rewards programs. And these rewards programs we're not giving you the treasury yield, because that would be a security, but we're just giving you a thank you for being on Coinbase. It just so happens to be, it'll be a % of how much USDC you have. What do you guys think about this?
I'm happy to take it. Okay. So yeah, the banking lobby has been heavily all over all of this, no question. And there's a major issue for them if people can get yield on stablecoins. There's also, and you mentioned the KYC issue, it is really hard to send revenue just to a coin holder. You don't know where they are. They could be in North Korea. You don't have any way to do the KYC. If they're in the United States, you don't necessarily know how to do the tax reporting, which is a major hassle. So that's not surprising, but then you kind of answered the question yourself. How do we get yield to people? It's DeFi. And it's probably not government-sanctioned DeFi. It's probably DeFi from companies very much like the ones that pitch at these competitions that kind of sit there and kind of go, okay, we figured out a way to get 12% yield to somebody. And whether that's sustainable or not, I don't know. There's math involved. I'm a lawyer. But like,
But what about specifically the treasury yields? How can we get that to the consumer?
Yeah, I mean, I think first off, I mean, they can buy treasury bonds to start with. I think with the stable coins, one of the biggest reasons why it like has been pushed so hard is because it is going to be used by the unbanked in other countries. So while we're losing some dollar hegemony in terms of being, the world's currency for oil transactions, that's kind of going away, we're potentially gaining a bigger kind of use constituency in all the people in all of the areas that have like hyperinflated local currencies that can now get dollars without needing a bank account. All they need is a phone. So that's kind of huge, but getting them all yield is a little bit more of a bitch, quite honestly.
Well, it kind of goes it goes against what so like a lot of people don't realize the US dollar is a two-part system. It's a staking system. You have dollars, which the unsophisticated people, the stupid people, they hope will use dollars in their everyday life and they take the inflation hit. And then the sophisticated people, the people who know how to buy treasuries, who can get around the system, who have like the right, people, then they stake their dollars and earn a yield through treasuries. But the banks are trying to stop us from getting this to the people.
Yeah.
We should let the people get the same deals that the sophisticated people get.
I mean, I love the idea, but I think, there's a right tools for the job thing here. If I'm a person in a hyperinflation currency country, I need a medium of exchange. I'm not getting a dollar because I'm expecting to get 1.25% on my dollar. I'm using it because like I'm working, I'm getting paid in something, and I don't want it to be valueless the next day. And you don't need yield for that.
You guys.
Yeah. Thanks so much. Anyway, just by way of introduction, I'm Mark. I'm co-founder of Outlaw. I started my career as a private equity M&A lawyer, Clifford Chance, Morrison and Foster, before starting my own shop. We have created a niche in supporting projects as fractional in-house counsel. So maybe I can offer that side of the picture. So we've been talking about T-bills, treasuries. I think what we're seeing in the market from the project side is many ways, innovative ways to actually earn yield for retailers. So for example, synthetic assets backed by market neutral hedge funds, right? And different governance tokens, staking tokens, how you actually create more yield for different users. I think that's some way in which we can explore.
Like Athena, kind of?
Similar, exactly, right? But many, many different ways, right? Market neutral hedge funds, working with plasma, etc., which is status chain. So we are seeing a lot more innovative products out in the market right now, synthetic assets in general, right? So as to offer more yield to retailers.
Maybe I can, a question for you, Noah, is on the same vein. There are a lot of people trying to find a workaround, not for treasury yields, but for things, for other kind of funds and yields and securities in general. You guys are pretty big in the securities space with Upside and your work. So Upside was a spin out from Republic, and you guys managed a lot of their security, their tokenization and security stuff, and actually building on-chain funds. And so there's a lot of people trying to find ways to get U.S. securities or any kind of thing that should be deemed a security or that the U.S. would deem a security to the masses. In the same kind of thing we're talking about here, but just it's the same problems, different kind of little field. But yeah, how are you guys dealing with this?
Yeah, I think it's funny. This came up in a conversation we had previously about.
A little louder.
Yeah. So I think in terms of global access, there are a lot of there's venue access itself. So I think that having rails that go everywhere in the world makes things more accessible. So that problem is very well solved by blockchain, and it also allows for a lot more venues to access these assets and to trade them. So that's one part, which is just can I access the market? The second part is, are the sizes of those assets of the right buy-in that makes it accessible? So one of the things on the Republic side is, can unaccredited investors in the U.S. access private market deals like SpaceX and Anthropic? Because really there's incredibly low amount of return in the public markets, and all of that is all of the increase in value is actually occurring in private markets. And so I think that is that's a good objective is to gain more access through that function. And then I guess like there's two ways of dealing with the AML KYC question. One is less things require AML KYC. The other is AML KYC becomes extremely easy and reusable and portable. And I think that we will see. It's ultimately the regulators decide which things need the AML KYC. But if we do make the identity more portable, then it will also improve the access problem.
Through things like decentralized ID, I'm guessing.
Yeah, actually, this is a huge thing in RWA is that because you have these transfer restricted tokens, they rely on you knowing something about the identity of the holder in order to determine what the transfer restrictions are. So at least the systems that we are creating now allow for the portability of identity across multiple contracts, so that if you've already been onboarded, you're onboarded into a decentralized system rather than just onto, say, one exchange. And that reusability of identity, it has a lot of benefits. Like, part of the reason that we don't have the same kind of liquidity in the RWA space is because of the fragmentation of identity and the intersection with the regulatory side. So both of those things are things that we're looking at very directly and solving within the current U.S. framework for securitized assets specifically.
So a lot of info there, but can we somehow get these securities to people in other countries? Either so some people are doing things like they are issuing the security or this wrapper of a security through a broker. The broker, is not allowed to sell to U.S., but they're able to sell non-U.S. even though it's U.S. securities. It's kind of ridiculous, and then the little gray area is once it goes out of that broker's hands and it hits like secondary markets like DEXs, it's not in their jurisdiction anymore, the issuer. And there are people doing this at starting at scale right now. And so is that viable? Like, the way I look at all this is Milton Friedman said we gotta Milton Friedman basically said we gotta, in a sly or roundabout way, take money out of the hands of the government, and if we do that, we can make money good again. And I think that's what we have to do with DeFi, securities, and all these things, is we have to find these workarounds that force the government to play ball with us. That's my opinion.
Yeah, I mean, as an operator, I try to make the rails as smooth as possible, which is my perspective. So I think what you're talking about is like Reg S rulings are issued under Reg S offshore, and then eventually it moves back into the U.S. It is tradable, or it's tradable in other places, and there is a shorter time period before that trading can occur. The tokenization system that we built is very precise about the exact issuance dates, the location of the person, when they can begin to trade, and to make that as seamless as possible. So in a way, we've encoded those regulations in the most sophisticated way that we can, so that the rails can be as smooth as possible. And that's the position that we've chosen to take. It's a sort of risk assessment for us as an operator also about really wanting to serve the U.S. market first, because there's so much capital in the U.S. that doesn't have access to this. So that's the route that we've gone down, is like encode this as efficiently as possible to gain access that way, and then look for the changes that are happening on the regulatory side and follow them as closely as we can.
Do you have more on that?
No, I mean, yeah. I could go into the whole Reg S piece of it and such, but I don't want to follow that answer. That was a good answer.
All right, let's talk about how the world is looking at securities versus commodities. So I think as part of, I believe, Clarity, right? They're saying that certain things that are more commodity-like and more blue chip or like established, and I think that they actually worded something like that, which seemed weird to me. But anyways, basically, I think, Josh, you have some opinions on this, securities, commodities, Clarity, and all this.
Yeah. All right. So the first thing is, everything is a commodity, including securities. Securities are just exempted from the Commodity Exchange Act. So whether it's blue chip or not, it doesn't matter if it's my shoelace or it's a bar of gold or it's your American flag pin. These are all commodities as far as the law goes. The Commodity Exchange Act really lays off the spot markets, and that's why, like, from a regulatory standpoint, as long as you're not doing futures and leverage, if you're not a security, you're just a commodity, you kind of have a little bit of a free roll, which is great. It's also probably going to go away under clarity. They're likely expanding the control of the CFTC over the spot markets to kind of deal with a bunch of kind of the quasi-legal market making and things of that nature that's going on. But I think what's really super interesting right now, if you're like a nerd about this stuff the way I am, is that the CFTC and the SEC are releasing joint statements. So they're clearly moving towards a place where disparate types of assets can be trading on the same venues. And they also, I think, recognize that they can't stop it from a DEX perspective. If you're going to have a situation where you can have a token trading for a share of tokenized stock on a DEX, there's not really a lot they can do to deal with that, quite honestly. And there's other reasons from a practical perspective why that's hard. I know that. But we're getting into a place where a lot of these distinctions that made sense in the 1930s just don't make sense anymore.
So, this for any of you, but do you guys think we will see a day in the near future where you can trade some version of a U.S. security on QuickSwap or Uniswap?
I think when you throw in the DEXs, it gets very interesting. If you want to go to a centralized exchange, do I see like a day that'll happen? I think I do. You're going to see, I think, an expansion of FINRA's coverage, because the thing about the centralized exchanges that the government has is they're telling you, centralized exchange, OTC, ATS, you cannot facilitate a trade unless the security in question is current in its Exchange Act reports. It's all about disclosure. So it's not that hard to imagine a Coinbase or a Kraken picking up that type of thing and saying, okay, if it's designated as a security, we won't trade it unless the disclosure is there. So I think that probably does happen. When you get the DEXs involved, then there's a whole analysis of like, are you like steering the front end and responsible, or is it just the back end and like anybody can access it, and that gets a little different.
And maybe just to add on, I think this brings up the point of regulatory arbitrage. I think certain jurisdictions may permit allowing certain securities to be traded on DEXs, etc. But then that worsens the problem of regulatory arbitrage, because then different nations, different jurisdictions would have different requirements, different KYC standards, etc. Ultimately, yes, to answer your question, but probably not on a global scale.
Probably not what?
Not on a global scale.
I'd like to go into Korea regulations. I don't know if you know or you may know, but yeah, so like what is happening on the Korea scene and how are they, you kind of touched on it a little bit earlier, but how is Korea dealing with all this that's happening? Are they moving fast? Do you think Korea does seem to kind of want to like protect their own industries a little bit? How are they looking at their, how is Korea going to be part of this new crypto world?
Actually, in Korea,
Hey guys, can we be a little quiet so we can hear her, please? Thanks, guys.
In Korea, virtual asset industry is not that beautiful industry to the government before, but new administration wants to digital asset industry become a future industry of the Korea. So they have intention to foster the industry, especially for the digital assets and industries for the America's legitimacy, and also they are preparing for some digital asset basic acts. But before that, we have already two kind of legislations. First is the specific financial information act, and this is something like the BSA Act, and the regulator's name is FIU, and it is some regulator which is like a FinCEN in the USA. So
Wait, that's a newer one for you guys?
this is not a new rule. This is from the year 2021, and they make some laws to become a virtual asset provider. They have to get the license from the government, which is called FIU. I already said, and year 2024, last year, there's some new legislation have been acted. And this is for the users protection law kind of things. And also they have some regulations for market manipulation. They are banning the market manipulation right now. But this is not for the securities or something like that, and only for the crypto assets. Actually in Korea, crypto asset and securities problem has been finished. This kind of discussion has been finished almost 3 years ago, because almost all the crypto assets are not securities in Korea. So VASP just can make them traded by the people freely in the VASP. Like they are like CEX, like exchanges, central exchanges like Apero or Bitcoin, and yeah.
Are you, just so as a simple question as a follow-up to that, are you optimistic on crypto in Korea?
Yeah, absolutely. Because I said that they are making in the Congress and the new administrative making some new laws, and they announced that the end of this year the new law will come to Korea, and this law will permit the ICO. So I think this is kind of big change in this industry, and the digital asset industry in Korea will be much more have many chances than before, I think.
Okay, one more. Why can't we order any food, Uber Eats or anything in Korea? Joking, but it does suck. We tried like 5 apps over the last 3 days. It does not work. All right. So, okay, I want to take us into final topic here. I think we're running out of time. I want to see, so we have the Network State, or Network School, Network State event coming up. Are any of you guys interested in this? Because this is a panel on regulation and governance. And I think it's pretty interesting what's happening with this. Does anyone want to start talking on that? Yeah?
Yeah, I think this is really interesting. I think we've had regulation through enforcement in the U.S., which is probably the slowest way of getting clarity. And then we have more additional rulemaking, which is also a great way of getting clarity eventually. But what I think is the opportunity for network states is actually real-time regulation. And we've had this, it's like the original crypto ethos is, code is law, or maybe that's second generation even, Ethereum code is law. And then for securities, we spent a lot of time making law into code, which is smart contracts. But the thing that I think is going to happen next is actually regulation as code. And when that happens, we'll be able to do atomic real-time checks of whether or not something is within regulation. And I'm very interested in that, and I think that that will actually occur within network states first. And that will be a huge advantage for network states to have instantaneous regulatory clarity about specific transactions.
That's beautiful, by the way. I kind of agree. So, the U.S. legal system is 250 years old, something about that, and we designed in slowness, the checks and balances. You guys have heard about this stuff. Like we've got a bicameral house. Technology is going like that. We're here. We're on the vertical part of the asymptote. It actually, if anything, takes longer to enact law than it used to. So, from a network state perspective, you do get the advantage of ground up design from this point in time, and I could go into it for a while, but there's a lot of really good ideas. The problem with it, and it's not really with it, but the problem is that it's easy enough to get into a network state. What it's very hard to do is to get out of a current country. So even though you can come up with all of this stuff, the issue is that like actually affecting it in a way, the United States is like, well, it's nice that you think you're not here, but we think you're here, and you're kind of stuck with that.
You basically you have to renounce if you want to me the most alluring benefit, lower taxes.
Right.
You have to renounce, right?
Yeah, yes, you have to renounce and you have to pay your exit tax. Let's not forget that lovely thing that no other country on the planet does.
Michael Turpin had just told me about one of these. So there's a lot of these. Balaji's kind of idea is that we have a lot of these nodes, these network states around the world, and some of them may be physical, some of them are more just for fun, like Liberland. But Michael Turpin was telling me about one that's happening. I guess it's spawning out of Indonesia, but it has no land, and so it's just like a pure virtual state. And I think he said that they have 3 countries that have recognized them officially and are offering passports, visas, this kind of stuff. So I think that's pretty cool. I mean, you can imagine a virtual state where if 100 countries recognize you and will allow you to travel between them.
Yeah, no, totally. I mean, this is kind of why cruise ships are always like registered in like Bahamas and such. It's a similar type of thing. So
your country is registered in the Bahamas.
Right, your country is registered in the Bahamas. There's only a few places that have no law. Like you have no law in Antarctica, you have no law in international waters, you have no law in space. But the thing about it is, if you have no law that applies to you, it turns out that everyone's law applies to you, and whoever happens to want to enforce on you can. So that's why the boats are all out of some place instead of just kind of being their own free thing. I love the idea of a country that is acknowledging a network state just because it gives it the ability to anchor that way. So that, very interesting concept.
Anyone else have thoughts on network state?
Yeah, I think just to add my 2 cents, I think creating a network state is probably easy. Getting recognition and getting traction is difficult, right? Because that brings back to the point of regulatory arbitrage, etc. And I think that would be a difficulty.
Yeah, I mean, especially if you get big enough and you have a bunch of billionaires or millionaires leaving countries and going to these network states, you're probably going to see things like, more global minimum taxes and this kind of stuff.
I mean, the definition of sovereignty is being able to use violence to extract taxes. So, I mean, going back to feudalism here, and yeah, I mean, Uncle Sam is going to get his. And in my case, so is Uncle Gavin, because California, yeah.
All right, well, that was great, guys. Thank you so much. This was a pleasure. Let's give them a round of applause, guys.
Thank you, Rob.
It's a pleasure, sir. Nice to meet you. Likewise. Oh, yeah, likewise.
Can we do a photo?
Okay, everyone. So thank you so much for your attention and presence at DNA House. We are now moving into cocktail hour. So a round of applause for cocktail hour. We have round of applause for the amazing chefs and staff of Schedule Osteria. And to Korea, thank you so much for having us, Korea. Enjoy the rest of the night. If you've RSVP'd for dinner will be served at 7:30. Thank you so much. The night is still young. Bravo. Yeah, oh yeah, two. Just two. Oh wait. Okay, I feel good. There's two things. Sandeep Nailwall from Polygon will be here at 6:30. And can I invite Mihao from Matify to come to the stage, because we have a very exciting activation that's happening right now. Mihao, are you here? But before Mihao comes, I'd like to introduce my favorite, Alex, from Burrito Wallet. He's going to come here and help us do something. Alex. He's got the music.
Yeah, he's got the music, yeah. Thank you, Shantani. Hey, ladies and gentlemen, my name is Alex Lee from Burrito Wallet, and I'm going to entertain you tonight by singing the opera. Yeah, I'm actually the co-founder of Burrito Wallet, and I've been an amateur like opera singer for many years now. But now I have a second job now, like being a professional like opera singer. So tonight I'm gonna sing Nessun Dorma from the opera called Turandot. So, but let me check my voice first if I can sing it without the mic. Yeah, no mics. Yeah, can we start again? I can't hear the back music. Thank you. Yeah, please, yeah, make it louder, please. this
Yes,
properly.
yes, yes.
Yes, let me introduce Indeed. Again, like my name is Alex from Burrito Wallet, and we are the non-custodial wallet in Korea, and the biggest one, the largest one, and only one. And we also like provide the marketing service, like for the project who wants to come to Korea, expand their market. So I'll be there. If you want to learn about like more about us, please come to me and I'll explain to you. Yeah, thank you.
Thank you so much. And Burrito Wallet, thank you for being our partner here at DNA House. We appreciate you, we love you, we support you, and we have invested in you. Thank you so much. Okay, so without further ado, Mihao, where are you? Take it away.
Okay, if you could pull up the name deck for me, please. Do I have a clicker? Mo, can I get a clicker for this? Okay, so I'm the CEO of American Fortress. We're going to do something super fun. We're going to auction off some American Fortress names. So we got some juicy names for sale. We got Freedom, just the word Freedom. We've got the word OG, as in Omega Golf, just 2 letters. But let me tell you what these things do. So what do Fortress names do? So this is a new wallet tech, and Burrito team, I will talk to you about this for sure because it's available as an SDK. And yes, we love the Korean market as well. What the names do is you can put a Fortress name up on your Instagram and any compatible wallet, which includes American Fortress, and also shortly MetaMask, because we're putting our API inside of MetaMask. That wallet will be able to just compute your receive addresses on any chain automatically. So like, and they're stealth addresses, meaning only the sender and you know what they are. So you can put up your name and just receive crypto forever, and no one knows how much crypto you received. And we white label this tech. We also have a hardware wallet and decentralized DID and signaling. And that's American Fortress, digital trust made in America. If you really hate America Meta, then later we'll have a Swiss Meta. Do you want the mic? Okay, go.
Hey everybody, if we can go ahead and get everybody to quiet down, we're going to be doing a name auction. So if you guys can just listen to the names and give Mihao the attention that he deserves, that would be amazing.
Thank you so much. We did win Bid Angels for the 3rd time earlier today, so that was cool. So next slide, I'll talk a little bit about American Fortress, and we'll just get going with the auction. I'm going to do my best to be here like, all right, can I get 250 to 300, like that sort of thing. So American Fortress, the beta is launching next week, along with the name checkout, so you'll be able to go and just reserve whatever names you want. Now, one thing about the names is initially we're only selling names over 6 characters and over. There'll be a special sale for the root level names that are 5 characters. And then also next week, you'll be able to buy Litecoin domain names. So like yourname.lite. That's part of our partnership with Litecoin Foundation. We are releasing the world's best, easiest to use, most private Litecoin wallet. It's going to be called, get this, American Fortress Litecoin. So you'll be able to get in all this next week. But this week, if you want one of these names, you're going to just bid, raise your hand. I'm just going to do my best as an auctioneer. Well, we're going to blow up the names in a second. And if you're an investor, you can also have a name. But these, we're just going to try to move. We're going to sell them today. All right? Yes.
Just tell me when to scroll and I'll scroll.
Okay, awesome. So maybe next slide, Mo, and then we'll talk about the wallet for 2 seconds and we'll get to the auction. Next slide. Oh, thank you. All right, so this is our wallet, American Fortress. You'll be able to download it next week. If you want to follow us on X, it's AmericanFortress_IO or AmericanFortress.io on the web. So we're just going to get started with the name auction. So these are top-level names. They are lifetime names. You have them. They're yours forever, unless you lose your keys associated with the name. So in which case, lose your keys, you lose your money, you also lose your name because this is fully decentralized after you register a name. So, next slide. Send to name as a global standard, end-to-end security. This is also AI ready. And that's enough plugging. So let's try the auction. So Mo, if you could pull up the first name. We are going to start off with Freedom. So lifetime names, top level names on the website. We will be selling them for 400 USDT or US dollars via credit card. We're gonna start the bidding at 200 here. And basically if you win, my friend Richard from Lunar Digital Assets will go grab your email. We'll send you an email with all the payment info and we'll go from there. Okay, so the name Freedom will start at 200. Who wants Freedom for 200 USDT? I'm looking for 200. The first bid, 200, let's go. The name Freedom, yours forever. Anyone. Okay, I got Rock going for Freedom because he requested Freedom. I'm at 200. Can I get 250? 250 for, okay, we got Sergey for 250. 250, looking for 300 on Freedom. The name Freedom, yours forever, securing your wallet for eternity, making you stealth addresses forever. We got 300. We're gonna go in for 350. Anybody 350? Rock for 350. Okay, Sergey, are you going to match 350 to 400? 350 to 400, a nod, I got a nod from Gain Capital. There are no losses, there are only gains at Gain. So, we got money for names. 400. You're looking for 450. Who wants Freedom for 450? Who wants Freedom for 450? 450. Okay. No, we're at 400. So 400. Going once. Going twice. All right. 400 sold to Sergey. He's got the very first name from American Fortress, and the bonus is you get to pick a shirt or a hat, but I'm out of medium. You're probably a large, so do you want the shirt or the hat? All right, so here we go. You get the same shirt, amazing shirt I'm wearing. Here's the large, and congratulations on the first name. First name, sale ever for American Fortress. Yeah. All right, next to the Freedom. Okay.
Freedom can't be bought, but we just made it.
The Russians just bought Freedom.
There's a name that's not up there, but you should auction off Korean barbecue.
No, I'm not gonna do that. Terrible. No. Terrible idea. Okay, we're moving to the next name. This one's a good one. Just OG. All right, so you will be OG, known as OG forever in Fortress name system. We're gonna start the bidding at 200. 200 for OG. Can I get okay, Chris Miglino for 200. Can I get 250? We're at 200. Can I get 250 on OG? Who else wants the name OG forever? Lifetime name. OG, 200 to 250. 200 to 250. Anybody on 250? I see some people thinking about it. 200 to 2. Don't make me move OG when I moved for Freedom for 400 just now. Like I feel 150. That's terrible. No, it has to go. It's not, and by the way, you can resell these. They can go up. So 200 to 250. Who wants OG for 250? OG for 250. OG for 250. OG for 250. Move. No. You okay? Rock wants okay. So 250 going to 300. Who wants OG for 300? 300. Okay. Chris Miglino versus Richard from LDA. Looks like we got okay, so Richard, 300 to 350. 300 to 350, 300. I'm looking for 350. I'm at 300. I'm at 300. Let's go to 350. You can do it. You know you want it. You know you want the name. You can't let Chris beat you. Anybody can jump in. Okay. Okay, 350. We got 350. Chris, 350. All right, I'm at 350. I'm looking for 400. a new tie for the previous record for names sold. 300 to 4, 350 to 400, 350 to 400. I'm looking for 350 to 400. All right, all right, all right. Unfortunately, my co-founder's name is Chris, so we can't have another Chris. So right now we've got, what do we got? Richard at 350. Okay, going once, 350 to Richard. 350 to Richard, going once, going twice. Sold to Richard for $350. Yay! All right, we're gonna do 3 more of these. All right, next one. Next one for sale is Alpha. Just the term Alpha. So if you want to receive crypto at Alpha, that's it. For the rest of your life, we're going to start the bidding at 200. So 200 for Alpha. Who wants Alpha? The name Alpha for 200. 200, looking for 200. 200 for Alpha. Any takers, any takers, any takers, any takers. No one buys it, the auction ends. Who wants Alpha for 200? We'll go from there. Joe, I see you looking at me. Are you thinking about it? 200 for Alpha. Okay. All right, so I'm going to just list off the rest of the names. And I want anybody that's actually interested in one of these names, because maybe you want just your name. Like maybe your name is Joe, and next week you're going to want to buy Joe, right? But I'm going to list off the rest of the names that we have here. So we've got Alpha. Yeah, okay, so HODL we will auction off. Great. All right, so HODL is one we'll do. Keep going. DGen. Anybody wants the name DGen? Anybody interested in DGen? Right, we got one auction going for HODL. We've got one buyer for HODL, so cool. All right, no one wants DGen, let's keep going. Wizard. Anybody wants the name Wizard? Forever at American Fortress. No? Okay, keep going. Diamond. It was Diamond Hands, but that made it shorter to just Diamond. Okay, Diamond, keep going. Libertarian. Okay, we're gonna, I know the buyer for Libertarian, so yeah, this will be, okay, so we got we're gonna go for HODL and Libertarian, keep going. This one's controversial, but Rock suggested it. MAGA, I have no idea what that stands for at all, but American Fortress. So anybody interested in MAGA? Anybody wants? Yeah? No? All right, I think we got 3 more. What are they?
They'll come bid for this one after the show.
Okay, no one wants to be like super political. All right, Phoenix. Anybody for that? No. I got HODL. I got Libertarian. Who else? What else are the last 2 names? Titan. Anybody want Titan? Okay, no. All right, and last one is. What's the last one? Pump. Does anybody want the name Pump? Okay, we're going to start the auction for Libertarian. Just get this one over with real quick because I know who's buying Libertarian. So we're going to do the Libertarian auction. Okay. Yeah, you're gonna, okay. All right, we're starting the name auction for Libertarian, 200. I'm looking for 200 for Libertarian. 200 for Libertarian. Rock, there you go. You got Libertarian for $200. No, Cindy. Okay, 200 to 250. I'm looking for 250. Cindy, are you gonna? Okay, 250. And they're like almost married. They're engaged and they're bidding against each other for the word Libertarian. Rock, 250 to 300. 250 to Rock's going for 300. Cindy, do you want? It's like shopping money going out the door right now. 300 to 350. Who's gonna get it? 300, I'm looking for 350. I'm at 300, I'm looking for 350. I'm looking for 350. Nope, okay. I think we got Rock for 300. Going once, going twice. All right, Rock got Libertarian for 300. All right, and our last fun auction of the night is for HODL. So let's scroll back up to HODL. Don't show MAGA. So much fun. Okay. Hodl, the name Hodl. How much? 10, no, starting at 200. Hodl, going for 200. 200, I'm looking for 200 to start the bidding for the name Hodl, H-O-D-L. You know, and we're thinking 200 for Hodl, 200 for Hodl, H-O-D-L. Richard, you're taking notes on who's buying all these things? Yes, okay, beautiful, thank you. All right, 200 for Hodl, H-O-D-L, H-O-D-L. 200 for Hodl. Rock is talking to our buyer. So we'll see what's happening. Oh, okay, Sergey's 200 for Hodl. I'm at 200 on Hodl. Looking for 250. I think it's Sergey might get it. Our other buyer, from Hadron. Is that where you're from? Beautiful. 250. 200 at 250. Sorry, I cannot hear you. Not by. Okay. 200. Going looking for 250 on Hodl. H-O-D-L. 100. No. Sergey just said 200. Sergey's just sweeping up the names. These will resell for a ton later. So, by the way, they are transferable. Okay, 200 on Hodl, going once, going twice, 3 times. Thank you, Sergey. You got Hodl. There you go. Your name forever. Thank you, everyone. Follow American Fortress. And support our project. And if you're a wallet or an ecosystem, we're happy to support you. Peace. Another photo? For Hodl. Okay, we're having fun here. More pictures. Sweet. Thanks, guys. Much appreciated. Thank you to DNA House for having us. Just a terrific event and terrific ecosystem. Thank you so much, Shandani and Chris and everyone involved. Okay. So. I got larges and smalls. Which one do you want? I'll give you myself. Just got large. No, Singapore can hold on to that. This should go to 70.